Open Monday morning expected to deliver some downside. It is definitely risk off. How that kind of breaks across Europe, let's find out. It's time for the opening trade. So the FTSE 100, not much tech, as a result of which you may see some relative outperformance out of London today, which is going to be interesting to watch. So in some ways, that's not where the story is this morning. The story is going to be elsewhere. The IBEX is already down by 0.8%. The 600 is down by 0.1%. We'll get some more numbers coming through, I suspect, out of Germany, maybe a little bit out of Switzerland as well. But it's the chip story. The Dutch market is also going to be fascinating to watch. Let's see what happens with the AEX this morning. It's not on this board, but the German market is thick with names like SAP, which have had a great run recently and in some ways could be a casualty of what we're seeing in NASDAQ futures right now. So we don't have a trade there yet. The FTSE is down by 0.2%. I think you'd probably expect these other main markets in Europe maybe to be down by a little bit more, but it could take a while for them to get open. So what are we seeing below the surface, Anna? Critty, single stocks, what's happening there?
Well, we are, of course, as you said, waiting for a lot of the German names to actually wake up and start kind of trading. So perhaps we're going to see a little bit more of a sell-off than we're getting right now. But off the get-go, I know we're focusing a lot on the tech story, and I'm seeing a lot of underperformance in the oil space as well. So you are seeing the likes of Shell, Rio Tinto, for example, among others, really taking a beating. And I almost feel like there's a little bit of a read-through here, maybe more in the early seconds of trading from maybe the tariff conversation than the tech conversation, as we're, of course, we're waiting for those trades to open up, because I'm seeing a lot of the EM-exposed companies facing the biggest weights.
Well, we've mentioned tariffs, we've mentioned tech. We haven't perhaps mentioned as much as we should have done in the last 20 minutes or so, the Chinese data, because that Chinese data was really quite weak, wasn't it, on the manufacturing side, despite all of the effort that the government had seemingly put into boosting activity towards the end of the year. That didn't deliver, and we saw disappointing news when it comes to Chinese PMIs. And so basic resources is the worst performing sector today, down by over 1%, and some of those names that are attached to the property sector, and it was construction and consumption in the services side that was not giving us a positive news story overnight from China. So lest we forget about the China data flow, that is also something that's having an impact, aside from some of the tech stories. We're still waiting for the CAC and the DAX to open though this morning.
No trade on SAP, no trade on Infineon. We need to see those numbers, but I think before we get a good gauge on what is really happening here. LVMH is up a little bit, so you've got an upgrade this morning from Morgan Stanley, but you've also got relatively weak China data, to Anna's point as well, which could ripple into the luxury sector too. But I think we need to wait and see what SAP does. Infineon's just opened. Infineon is down by 2.5%, now dropping 3%. So the chip sector story is beginning to manifest itself. Yeah, we're down by 3% on Infineon.
And we mentioned the chip sector. ASML still facing a volatility halt at the open, so perhaps some extra pain in that name that we're going to keep an eye on. It is a market sell-off, I think it's fair to say. Let's bring a true expert in terms of how to navigate it. Beata Manthi, head of European equity strategy over at Citigroup, joins the program this morning. You picked a great day to join us. Happy Monday.
Morning. What a Monday to pick, right?
Absolutely. You timed this beautifully. I mean, we're talking a lot about this theme of tech valuations. It feels like really kind of this cost-intensiveness, for lack of a better term, in the AI space has kind of been undermined, at least in theory, by this Chinese AI named DeepSeek. How much of that is a isolated tech story, as opposed to maybe popping the bubble that has been tech valuations?
So popping the bubble is a big word still, but it has been part of our story, of our view towards the end of the year, when we've been arguing that this very one-way positioning into mega cap tech in the US is becoming very risky, right? And for us, the best diversifier away from it has been Europe within the rest of the world bucket, because every other region has its own problems. So of course, if futures are right and Nasdaq will be down as it suggests, European tech will be down as well, right?
Yep.
But for me, more than geopolitical risks in the near future, it's all about earnings now and earnings delivery. All eyes will be on this tech results, especially in the US. The market is priced for perfection, right? It needs to deliver perfection.
There's some really big numbers at the bottom. Can I just flag, just in terms of some of the numbers I'm looking at on the screen at the moment? Siemens Energy is down. I just need to check whether that's an ex-dividend story or what is going on there, because Siemens Energy is down really hard. But names like Schneider are also down really hard as well. Like Schneider, which is a data center story, you could argue. We heard from the company that stock's down by 6-7% at the moment on the screen that I'm watching. ASMI is down by 6-7% as well.
ASML's now open and down 8%.
Schneider's down by 5.5%. These are quite big numbers. So in some ways, Europe is immune to the tech. In theory, doesn't have that tech story, but in reality, actually, some of the heavy lifting recently has been done by European tech.
Yeah, I mean, we'll build on that because we're talking about the valuation story. Hasn't the valuation story in tech been mostly the U.S.? Why are you seeing these numbers that Guy pointed out?
These are all very correlated trades, right? But you could argue over medium term, not very short term today, when you have a knee-jerk reaction for this first very liquid trades that are opening today, that the fact that European tech has done pretty badly last year gives it more opportunity over medium term, right? So you don't have these crazy valuation pressures I would have out of the US. But it's not cheap because it has re-rated
What's the beta? What's the beta on Europe to US tech? If US tech falls out of bed, you get a big drop. What is the read across to Europe?
Define fall out of bed.
Okay,
right?
so you go down by 5% on US tech.
Yeah.
Do you go down by 2% on Europe, or do you go down by 10% on Europe? I keep asking this question because it's really unclear at this point.
So the US, so the growth sector in the US is around 50% of the entire index.
Yeah.
In the US, it's 15. But not only talking tech, it's growth, right? So in theory, you have smaller direct impact, but it's going to be impacted, no doubt about that. The valuations can shield you a bit, but in a proper risk-off environment, Europe is going to be at risk. But probably, according to our models, it's going to be a buying opportunity. Because at the end of the day, it is about the global growth prospects, right?
Mark Cudmore was postulating earlier that this could be the end of US exceptionalism. What does the end of US exceptionalism look like?
So for us, from the equity market perspective, last 2 years have been all about mega cap tech. Why? And all the gains out of S&P have been driven by this very few number of stocks. Why? Because growth was scarce, right?
Yep.
If growth is scarce, you buy it at wherever you can at any cost. Now, the view for this year, and that's to do with this global growth prospects from the economic perspective. Of course, we are coming from very low levels for many parts of the world, so you can assume some positive deltas. US growth is holding up okay for now. So our view for this year is that you could see broadening of EPS across sectors and regions. So if you see the right conditions to buy the rest of the S&P index, these have been calls from some, right? So by equally weighted versus the MAX 7. If you see the macroeconomic conditions to go for this trade, European index offers you a very similar growth profile to the rest of the S&P at substantial lower cost. You don't need to pay up for it. And the rest of S&P is very expensive as well, as expensive as MAX 7, right?
Okay, so if we see that broadening trade in the US, that could play out well for European stocks.
Correct.
So as we look at these themes that we're playing with this morning, then, Beata, and they're sort of coming at us thick and fast, there's the questions around AI in the United States and whether big hyperscalers have been spending too much money to provide that service to others. Too much capex there. And then there's the theme of tariffs and what we've learned from the way that the new Trump administration will use those tariffs, as we saw with Colombia. So from a European stock perspective, what makes you more nervous of those two things? Are you more worried about the tariff story and what we're seeing from the Trump administration? Or are you more worried about US tech and how vulnerable that is? Which has more read across into Europe, do you think?
For the European index, probably tariffs if they go full on, right? Which is not our view, and from what has happened overnight, looks like it is a negotiating tool for now. And on the top of things, the European market has priced in a lot of these tariff risk in a very undifferentiated way towards the end of the year. Now, if indeed there's a huge pressure, if we come to the reporting season of Mag 7 and they come in line or disappoint, the market will be down, right? But over medium term, it's not as bad for the European market as full-on tariffs would be, as coming back with the rhetoric of punishing the rest of the world.
And what about the rate story and the way that links into your view then, Beata? Because we, of course, saw rates globally, the US in particular, but globally rising through early January and then sort of moderating a little bit, stabilizing a little bit. I mean, obviously, it depends why rates rise, whether it's a growth driver or inflation fears, as to how that reads across then into stocks. Is that the base case?
Absolutely. So we've had a super strong sell-off in global bonds, really starting in September. And we've looked what happens when these sell-offs abate to equities going forward. And actually, you have a very wide range of outcomes. European equities could be up substantially with cyclical leading, or they could be down. And the differentiated factors, the factors in common, and we looked across many factors within the macro world. Is inflation stable or falling? And is our PMIs stable or growing? So to do with the point I mentioned at the beginning, what is going to happen to global economic growth? So rates at these levels, in theory, well, there will be a problem for very leveraged parts of the market. So, for example, late last year, we've downgraded utilities, right? So it's a rates call or infrastructure plays would be at risk. But overall, if rates are high because growth is strong and there are signs that inflation is in control around the world, over the medium term, not today, it could be a bullish call for continuation of the cyclical trade catch-up that we've been seeing in Europe.
Okay. That's the longer, more medium term.
Correct.
More medium term picture. Beata, great to see you. Thanks for stopping by to see us. Beata Manthi, Head of European Equity Strategy, joining us from Citi. Let's talk about today, because today we're certainly seeing some fairly big moves. Take a look at what is happening with the Core 6. Anything related to the AI story is under pressure this morning. ASML is down. Look at what's happening with Schneider. All these companies that have been bid up recently around the data center story under significant pressure this morning. Remember, private equity is also in on that trade too, so let's pay attention to that too. But what you are certainly seeing is tech under significant pressure. The market is seeking safety elsewhere. Look at Nestle, it's up this morning. Some of the pharma stocks are also doing relatively well. Joe's got more details. Over to you.
So just wanted to check in on some of these other capital goods stocks, guys, because they're absolutely slammed at the moment. You mentioned there Schneider Electric. We're seeing Siemens Energy, another one you flagged, down 16%. Also seeing ABB in Switzerland, Legrand, all of these companies, anyone with exposure to the chip space getting hit on this DeepSeek news that is really taking the market by surprise at the moment. Some massive drops in there, particularly Siemens Energy. Meanwhile, Ryanair gaining. Now, that was mixed. We did see a decline in their profit and also some of their passenger numbers, but the quarterly sales actually better than expected, so that does seem to be the boost on that one. Then in terms of the M&A, lots going on today. We did see that news that Veritas and SGS no longer going to be merging, and therefore we're seeing a retracement of the move. So SGS coming back up, that was the one doing the buying, therefore it had been hit. Veritas coming down at the moment. Over in the London market, WH Smith, that one was looking higher in the pre-market indications. There it is, up 6%, potentially going to be selling all of their high street retail units, according to the firm. Universal Music, meanwhile, they've got a deal with Spotify on redistribution rights and compensation for artists being taken well this morning. And then just finally on the rating change that I wanted to flag again, BAT, that was one of the best performers across Europe at the open of trading. UBS likes it due to the buyback outlook, and the stock is gaining at 4% on the London market this morning.
Joe, thank you, Joe Easton, from our equities team with some of the read across that we're seeing from the DeepSeek story. We'll return to that shortly. Coming up, more on Ryanair as it cuts its passenger growth target once again. We'll get to that. We'll continue to focus on tech, of course, as well. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
Really a record-breaking moment.
Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Welcome back to the opening trade. 8:16, 8:17 here in London. So just into our session here in Europe, and we are seeing a read across from the news around DeepSeek, this Chinese large language model that does seem to have taken some by surprise, many in the Chinese market, of course, following this story for a while. But it's having an impact on European tech names today. We see that evident in some of the markets we're following, and certainly on US futures. Nasdaq futures down by 3.1% right now, and so that is certainly something that wakes us up and makes us take notice. Let us get some analysis now from Richard Windsor, founder of the independent research business Radio Free Mobile. Richard, really good to get your thoughts on this, because I suppose the question that is being raised and what we're seeing reflected in Nasdaq futures today is, does this undermine the business strategy that has seen so many big tech names in the United States spend so much money on AI infrastructure, AI technology? Is it undermined by how cheaply the Chinese seem to be doing this?
The short answer is don't know. And the reason for that is that if you cast your mind back to the Huawei SMIC thing about making super advanced chips, there was a lot of propaganda around that. The question is the main thing is it's impossible to tell at this point in time. So the good news is that DeepSeek appear to have made enough information available that someone can go off and replicate it. And if they can replicate it with that level of performance, which I would say is probably definitely real, with that level of cost that they're claiming, then we're taking a whole step forward in terms of artificial intelligence efficiency.
In terms of the compute that is required to do what this company is doing, though, is it possible with anything below Hopper? Is that something that we can look at and understand, or is it just impossible to tell?
No, the answer is it is possible. The big question is that if you trained it on the chips that we know for sure that DeepSeek has, which is an array of A100s, which is a 3 or 4 generations ago version of NVIDIA, yes, they could have done it, but it would have taken a really, really long time and cost a fortune in terms of electricity. The consensus in the market is that they had access to an array of H100s. But that's not really what's being questioned here, because everyone has access to the H100. The question is the techniques that they used, have they really been able to achieve and manage to train it to that level of performance by spending just $6 million?
But does that actually apply to maybe the roadmap or the barriers of entry for some of the U.S. tech that they are being compared to, the likes of NVIDIA or Amazon or even Microsoft, for example?
Yeah, I mean, the question here is, so if you look at it, I mean, the reason why everyone's getting nervous is that if you say that in the future demand for AI is going to be X, and you need Y amount of capacity to train it, and if we assume that DeepSeek's training method is correct and it works and can be replicated, then suddenly, if demand for AI doesn't increase by 30 times, the amount of data centers that we need just dropped by 90% or more. That's what's going on right now. And the answer to that question is, I'm afraid there's no way to tell until someone's tried to replicate exactly what DeepSeek has done.
Right. So, Richard, then the question is to answer that then, to get to that, so we replicate it, we try and train the model, and we try and do some inference and see if other people can do it for such low cost. Does that mean that... How long does that take? How long do we have to wait for that? Is that later today, or is that a week? Is that a year?
No, I think a couple of months, I would have thought. You know, the training time for a model typically seems to be around about 30 days, seems to be that. So a month or two, I said we would get an indication one way or the other. The other way to look at it, of course, which is not quite so negative, is if the cost of AI falls by more than 90%, then you would argue that demand for it would increase even more because it comes so much cheaper and so much more economically viable to use it in so many more different industries and use cases. So that's another way to look at it.
I'm looking at anybody associated with a data center this morning under significant pressure. The stocks are down. I imagine NVIDIA is going to be down pretty sharply. Richard, walk me through kind of the concentric circles of how this ripples out from this story. Which stocks get hit hardest? How long does that last? What am I looking at here? If it's a 90% drop, how do you price that into some of these stocks?
That's a great question. The answer is, I think the way to look at this is look at how much these things have run up. Look at how much above their historical price earnings ratio or EV to sales ratios these things are on the AI hype. And that, you know, your bottom end, your like a worst case scenario should be all of that froth and all of that valuation comes out and these things basically return to mean. That's your worst case scenario. I think that's unlikely to occur because if you look at artificial intelligence, there are a lot of use cases for it. Demand for it is going to continue. And even though DeepSeek may have cut the price to train massively, there's still this colossal arms race going on between China and the United States and the West, which means I don't think that even in the light of this, the spending is going to come back anytime soon, simply because of this, you know, the geopolitical environment and in terms of what's going on in terms of a race to get to advanced artificial intelligence.
Richard, always appreciate the context and your thoughts. Thank you very much indeed for joining us this morning on the back of this breaking story. Breaking, maybe that's the wrong phrase. This story seems to have been developing certainly over the last few days and weeks. Today, it's certainly having an impact. Richard Windsor, founder of Radio Free Mobile. Thank you very much indeed. Ryanair stock up this morning. The stock is up by 2.2%, as you can see on the screen. The company, though, downgrading some of its forward numbers because it's simply not getting the aircraft that it wanted from Boeing due to the manufacturing constraints that company is under. CFO Neil Sorahan told us a little bit earlier about the fact that he's starting to see, and he's just been in Seattle at the Boeing facility, he's starting to see some light at the end of the tunnel.
The remaining 29 aircraft in our 210 order book will be delivered ahead of next summer, the summer of 2026, which will enable us then to catch up a lot of the growth that we've lost this year to get to 215 million passengers. So I think Boeing have turned the corner. On the production side of things, they fixed their balance sheet last year. The management team are executing on the plan. Of course, we're disappointed that we're going to be left short aircraft again this summer.
Bloomberg's aviation lead, Benedict Campbell, joining us on the story. Benny, how held back is Ryanair at the moment because they can't get the aircraft?
Well, to some degree, they are still held back, but the downgrade isn't as significant as you might think. They went from 210 to 206 million, but still, that's in the space of less than 3 months, so things haven't improved. At the same time, if you look at the stock, investors are clearly looking at it sort of in a half-glass-full sort of way. They're looking at the profit numbers, the outlook. They are probably latching onto the comment that we heard just now that Boeing has turned the corner. So there is some degree of optimism built into this that they have really hit the bottom now, and it's sort of upward from here. The other thing is anyone looking for something good in the stock will latch onto this. It flatlined last year, so they have some room to recover. So this is a stock that clearly has room to move, and that's what we're seeing this morning.
Yeah, so they're really bucking the negative trend and moving higher this morning, Benny. I mean, we heard from Neil Sorahan an interesting phrase. He talked about the capacity being hugely constrained, this all to do with Boeing and its ability to supply aircraft, I guess. What does that mean, though, for Ryanair?
So it's actually good news for Ryanair in some twisted sort of way, because the demand is there. Travelers are still going on trips. They want to travel. That's very clear. The Easter bookings are looking good. The summer bookings are starting to look good, even though that's still fairly far out. But the demand is there. It's the supply side that's constrained. And it's not just Boeing and Ryanair. It's also every carrier that's using Airbus aircraft, those short-haul aircraft, the A320 on the Airbus side. That also has issues. We heard from Wizz Air continuously that they have a lot of aircraft on the ground. So all of that means that the capacity is constrained in what is still a hot market. And as a result, that means that these carriers can command higher prices because people, as I said, still want to travel. So in some slightly weird way, the fact that the demand is there helps them on the pricing side.
Certainly something we're going to be keeping a very close eye on. Bloomberg's Benedict Campbell joining us out of Berlin on those Ryanair earnings. Note that they are one of the few stocks that are higher in today's session, higher by about 2% off of that earnings report. We thank you so much. Coming up on the program, we're going to continue the conversation, maybe the other thing driving the risk sentiment in the markets. That is as Colombia U-turns after being threatened with a 25% tariff by the United States. We're going to look at the risks for other countries as well. Kevin Daly from Goldman Sachs joins us around the table. We're going to talk a little bit about the EM risk, the risk sentiment, and how well you really need to be pricing in some of this tariff story out of the Trump administration. In the meantime, European indices are pointing lower. Stick with us. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
The countdown is on. Everything you need to get the edge edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
This is the opening trade. We're 30 minutes into today's session. Seeing red across the screen, but perhaps the selling paring back just a touch. We are seeing the stock 600 down by 0.8%. The DAX is where a lot of the pain is concentrated, down about 1.2% as well, as is the French index, down about 0.9%. Maybe insulated, perhaps, is the FTSE, only down 0.3%, but certainly suffering from the risk-off narrative around the world. Part of that is going to be the tech story. The other part, maybe a little bit of the tariff conversation over the weekend. Let's dive into that aspect of the markets this morning. The U.S. is going to hold off on imposing tariffs on imported goods from Colombia after the nation agreed to accept the return of deported migrants. Now, the White House says it had announced 25% tariffs on Colombian exports after it refused to allow 2 military planes to land. Let's get some more details here. Bring in Bloomberg senior editor Bill Ferries on the subject. Bill, walk us through this kind of U-turn, this 180 from the Trump administration. Walk us through the details.
Well, as you know, Donald Trump campaigned on this idea that he was going to round up undocumented migrants and send them back to the countries they came from. He had a very active first week, and this was a part of that. Apparently, he had 2 military planes loaded with Colombian migrants that was headed back towards Colombia, and the government there refused to give them the airspace or landing rights to come down. Now, if this is the kind of policy that had spread to other countries with more migrants, it really would have put a damper on, I think, one of President Trump's signature policies. So he hit back very hard, announcing 25% tariffs. He said those would go up to 50% after a week if Colombia didn't back down. And in the end, they did back down after just several hours, basically deciding to accept those migrants. We don't know if there's been any other caveats or policies with it, but President Petro's government in Colombia basically deciding to it was going to be too costly to go forward with a fight over this policy.
Yeah. Bill, the takeaway at the end of last week was that Trump tariffs were unlikely to be delivered at the kind of worst case level that the market had feared. This weekend may be changing that a little bit. What do we now know Monday morning about the new White House reaction function around tariffs and how they're going to be used?
Well, certainly if you are a smaller economy and the U.S. president thinks he can get away, if the U.S. seems to have a lot of leverage in the relationship, as it did with Colombia, tariffs are a legitimate weapon that will be invoked on very short notice if you're not in line with the Trump administration's policies. It could be a little different, we don't know, but it seems like it's a little different with larger countries, larger economies like Mexico, which also refuse to have U.S. military planes deliver migrants back. So will Mexico face tariffs as a result? We don't know. We did see some weakening in the Mexican peso as part of this, general strengthening of the dollar. But those bigger fights are the ones that I think the markets and analysts are most closely watching going forward.
Bill, thank you very much. Bloomberg's Bill Ferries joining us there with the latest on this tariff story. Let's bring in Kevin Daly, co-head of CEEMEA Economics at Goldman Sachs. It's more complicated than emerging markets, but maybe that's a useful shorthand for us in the moment, Kevin. Thank you very much for joining us. So let's pick up where we just left off there with Bill. So what we've learned then from this is that smaller countries are maybe going to be whipsawed by this tariff policy and have some policies forced upon them by the Trump administration. Is that what we learned from this Colombia episode?
I mean, obviously the news initially on Inauguration Day was more benign at the margin than had been anticipated. There were fears that a blanket tariff might be introduced immediately. we didn't have that, and on the back of that, our US economists have lowered the probabilities of some of the tariffs. But, tariff risk clearly hasn't gone away, and it's going to be with us for a while now. We still expect as a central case quite a substantial 20 percentage point increase in effective tariffs on China. We still have a 40% chance of, 25% chance of more general tariffs across a number of economies. And it's clear that these are going to be used by bargaining tools in all manner of negotiations going forward. So this is a significant shadow that will be cast over the global economy and across EMs in particular.
Yes, and Kevin, for how long is an interesting thing to think about, isn't it? Because it seems from right now that for as long as President Trump is in the White House, this is a risk. So even if countries manage to avoid tariffs over a large period of time, tariffs could still come. It's not as if he's going to tell us. He's not going to play all of his cards right now, is he?
Absolutely, and I do think it's going to be there as a risk for, perhaps, for most of the next 4 years. But I think over time we will get a sense of how proactively he is going to use those. There are costs for the US, bear in mind, from tariffs. There are considerations that he will be factoring in the possibility of higher inflation. He's been very clear he wants lower interest rates in the US. He will have been advised that the imposition of broad-scale tariffs will raise US inflation and lower the chances of interest rate cuts going forward. So, that risk, I think, will be ever present, or at least over the next 4 years. But I think over time we're likely to get a better sense of how proactive they will be used and how nervous we should be about their imposition.
There was an argument a couple years ago that in Davos was almost rescinded by the likes of the IMF and the World Bank, and that EM was where a lot of these global structural cracks were going to show up, and they've proved to be far more resilient than a lot of people expected a couple years ago. Are tariffs as impactful on that narrative, given that resilience? No,
you raise a great point, is that, EMs are actually performing pretty well at the moment. If you look at 2024, they grew in aggregate around 4%. And heading into this year, that the start of 2025, actually momentum, was pretty strong. And our, high-frequency indicators across EM suggest that EM growth was accelerating to around 5% year on year, so above potential. Growth is pretty broad-based across regions, so across Asia, across LATAM, across CEMEA, as growth is accelerating. And also the drag that they faced from very tight monetary policy in 2022, that drag is now easing. So actually, left to their own devices, I think the outlook is pretty positive. It's one of the features that we have highlighted in our reports, is that there is a calm before the tariffs, is that EMs are performing relatively well. But if it wasn't for the risk of tariffs, I think we would be much more constructive on EM assets going forward. But that tariff risk is maybe slightly less than we feared it would be immediately before inauguration, but that risk is still very clearly there.
So if you're talking about maybe this insulation aspect to some of these EM currencies from the tariff story, FX markets aren't really feeling that. Take a look at the peso, take a look at the Brazilian real. Is the reaction function from some of these emerging markets on the fiscal front and the monetary policy front really more to address the currency? Is that the strategy they have to use?
It is. Actually, it's interesting. So EM assets have been performing relatively poorly against the dollar. But if you look at against other DM currencies, so strip out the dollar, actually EM assets have performed relatively well. Now, going forward, we have a stronger dollar for longer within our forecast. We expect, because of tariff risk, because of the policies being implemented by the new U.S. administration, we think the dollar will remain strong, will actually strengthen further. So one needs to be pretty selective about EM assets going forward. But we think that against a number of other currencies, EM assets will perform relatively well. We like high-yielding EM currencies in particular. We like some of these, actually, you mentioned the peso, but we like LATAM high yielders in particular because they are very cheap now, and also they have a relatively high carry. So there are definitely pockets of value within EM, but one needs to be selective.
If US tech sells off, how does EM perform?
if global tech sells off and global equities sell off, then EM won't be entirely insulated from that.
I sell Taiwan, I sell India to a certain extent, maybe. Where do you see the biggest effect? Nasdaq's down, futures are down 3%. Where does that show up in your
I think you're absolutely right. So Taiwan, but I mean, I would say more generally, EM equity markets provide a degree of insulation.
So the beta is less than 1.
It is, but also EM equity markets are very cheap. I mean, EM equity markets are very underpriced relative to the US, relative to tech stocks in particular, and so it is. We think there are value. We think we quite like China, but I agree. Taiwan is the obvious. Is the obvious example which would be affected by a tech sell-off.
Beata Matthew was here from Citi a little bit earlier on, and she was making the argument that if you see a broadening out in the United States away from tech, that actually the way to play it is by buying Europe, because Europe in some ways has the characteristics of the rest of the S&P, but is on a much cheaper valuation. Does that same argument apply to EM?
Actually, I would argue if you look at the valuations of EM equities, they are remarkably similar to Europe. And yet, the growth prospects for EM, as we talked about, is that, they're growing 4%, accelerated to above 4% at the start of this year, versus Europe, struggling to grow at 1%. So, I think there is a case for diversification outside of the US, potentially into Europe, but certainly I wouldn't overlook EM equities in that regard. We like, there are a lot of EM equity markets that are particularly cheap at the moment, which, given the growth prospects they present, we think represents an opportunity.
Well, where do you stand on China then, Kevin? Because we had the PMI data out this morning. They looked pretty disappointing, actually, and some have said this is a government that was really trying to stimulate the economy at the end of last year. Others saying, no, we haven't seen that yet. They're not going to do that until we see the full policy from the Trump administration, so we wait till spring maybe for that. How do you feel about Chinese stocks?
So, I mean, Chinese stocks are the main proposition there. We like them, is the short answer. We like them because we are overweight them, because primarily on valuation. I mean, they are particularly cheap. I mean, China has...
And is that enough? Do you see, in a world with Trump in the White House, valuation is enough? You don't need a sort of calmer geopolitical backdrop?
I mean, certainly there are challenges there for China. And we think that growth will slow this year from about 5% last year to around 4.5% this year. But that's, still decent growth, and the reason why we expect growth to hold up relatively well is because we do think there will be significant further measures introduced. As you say, is that I think the Chinese authorities are holding off on those until they see they want to respond to the imposition of tariffs and not before that. So they won't show their hand until the tariffs are imposed, if they are imposed. But we think that Chinese growth will moderate this year, but won't fall dramatically. And in that environment, with given the valuation that the Chinese equity market is on, we are overweight that the Chinese equities.
Kevin, great to see you. Thanks for stopping by to see us around the table this morning. Kevin Daly, co-head of CEEMEA Economics at Goldman Sachs. CEMEA. It's probably an easier way to say it, isn't it?
Thank you for putting us out of that misery.
We've just been reading it as it appears on the screen. CEMEA. Going to go with that next time. Okay, thank you very much indeed. Okay, coming up, a 10-year-old vessel-sharing deal between two of the world's largest shipping companies comes to an end this week. Are we about to see a price war? Are we heading for a shipping showdown? Probably need to fold in what is happening in the Red Sea to this discussion as well. We'll do all of that next. It's our big take today. That's next. This is Bloomberg.
But in recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
46 minutes into an equity session that looks pretty ugly, certainly from a top-down point of view. There are some big names that are sharply lower. Siemens Energy is down circa 19% right now. Munster's cooling company down pretty sharply as well. So the DAX is under pressure. It's down by 1.21%. But Europe pales into insignificance compared with the drops potentially we could see on the Nasdaq this morning. It is down over 3%. You're going to see some sharp drops potentially in some AI-related companies this morning, Anna.
Yeah, absolutely. So tech story front and centre for us. We need to keep an eye on what's going on with global trade, though, of course, such a big theme under the next this Trump administration. Let's talk about a slightly different angle on that is covered in our big take story this morning. The decade-long vessel-sharing partnership between Maersk and MSC is disbanding this week. Today's big take focuses on the world's shipping giants heading for a showdown, is the way it's worded, with analysts saying it could lead to price wars and customer poaching. Let's bring in Bloomberg's Brendan Murray, who leads the global trade coverage here at Bloomberg. A really fascinating big take story, and so we'll get into some of the detail here then, Brendan. So Maersk and MSC have had this sort of relationship, this cooperation agreement in place for a while. It hasn't always been happy, so it's not much of a surprise at this point that this deal comes to an end.
Exactly. They've been rivals and partners at the same time, and now this partnership is breaking up. To put this in perspective, both of these companies, if you combine them, they are like what Saudi Arabia is to OPEC. So they're huge. They're about a third of global container capacity, and they're going to basically go on separate. They're going after the same customers essentially with different strategies. MSC wants to make a bunch of stops on the east-west trade routes at different ports. Maersk is with its new ocean partner Hapag-Lloyd is going to make fewer stops, but feed those others with what the airline industry would call puddle jumpers, transshipping at shorter distances. So the idea that through what this alliance hopes to accomplish, they call it Gemini, will be on-time arrival. Something shipping has been trying to sort out for decades. About half of ships arrive on time.
And that's Maersk and Hapag-Lloyd. That's Gemini. That's
exactly.
The new one. Yeah.
Right.
Does shipping rates go up or down?
So shipping rates are going to depend in large part over the next 3 months on what happens in the Red Sea. Yep. If the Red Sea reopens to commercial vessels, then there's going to be a lot of capacity freed up. They're not going to go that long route anymore around southern Africa, and we will see shipping rates, spot rates come down quite significantly. Some folks say it could be that they could come down 20% to 50%, wow. But they will. So it's in this environment that MSC and Maersk will be going at it for competing for market share.
Well, we're talking about the shipping rates. The last time we see those spikes has a lot to do with, of course, the conflict in the Red Sea. And I think we were just showing some images of that as well. Since Donald Trump has come into office, he's redesignated the Houthis as the terrorist organization. That opens up a lot of military funding for that region. At a time when I felt like the Red Sea was almost somewhere where the U.S. military was starting to pull out of, how does this affect the shipping environment in that area?
Well, it will hopefully have something to do with the confidence of the container shipping lines. If they see the fact that that ships can be protected, that insurance rates can come down, then we should see traffic flow through there more regularly.
Just in terms of thinking about the Red Sea, I'm sure you guys talk to shippers all the time and trying to understand what the thinking is. What's their degree of confidence? The Gaza picture obviously seems to be improving. Is that something that they have faith will continue? Cody brings up Trump. Trump's obviously pushing pretty hard on Iran as well. The Houthis are backed by Iran. If there's a problem in Iran, does that show up with the Houthis again, maybe making shipping more difficult? It's a very complicated picture.
Exactly. Yeah. The statements that we've got from the container carriers is that they sound cautiously optimistic that they could start sailing through there again this year. But there's a big caveat there that as you suggested, a ceasefire could end without anyone being able to predict the timing of it. If you have suddenly rerouted hundreds of ships back through there, that's going to cause huge congestion problems at destination ports. And so the shipping companies want to see 100% certainty that they're not going to get attacked by a rocket or a drone.
Great coverage, really enjoyable big take this morning. Brendan, thanks to you and the team. Bloomberg's Brendan Murray.
We'll stick with another geopolitical story we're keeping an eye on. 4 weeks before Germany's snap election, and the political temperature is rising, to say the least. Tens of thousands of people marched in German cities over the weekend in protest against the far-right AfD party. Meanwhile, Elon Musk, who has been a vocal supporter of the AfD, made a surprise virtual appearance at the party's campaign launch on Saturday. Let's get more on the story with Bloomberg's Oliver Crook joining us out of Berlin. Ollie, walk us through what Elon Musk said at the rally and how important it is to the party.
Yeah, Critty, I mean, it sort of began with a lot of the sort of refrains that we've heard from Elon Musk over the last sort of few years, generally speaking, but also specifically towards the AfD, which is basically this idea that this sort of large government is what is sort of crushing Europe, where there's a lot of Brussels bashing and really wanting to sort of embrace the more libertarian side of economic policy that the AfD is putting forward. And that is sort of the thing that he wanted to highlight at the beginning of the speech. Have a listen to him there.
I think you want more self-determination for Germany and for the countries in Europe and less from Brussels. That's my opinion. I think there's too much bureaucracy from Brussels, too much control from sort of global elite. There should be more determination by individual countries. So I very much hope that the AfD does well and that Alice Beadle does become chancellor. I think that would be very good for Germany.
And so that's sort of the sort of standard Brussels bashing. Where things get a little bit more interesting is where he gets into sort of more of these sort of more political ideologies in there, basically saying that, multiculturalism is a sort of a failure and that basically Germans should really retain more Germanness. And of course, some of these things, when they're taken all in aggregate, some of these lines really stand out, particularly saying that basically there was frankly too much focus on past guilt, that they need to move beyond that children should not be guilty for the sins of their parents and their great-grandparents. Of course, this all sort of speaking in a veiled way about the sort of atrocities of the Second World War, coming at a time when you have had him just very recently speaking with Alice Weidel, when they go into these strange sort of digressions where they talk about Hitler basically being on the far left, not being a sort of far-right political figure, and all of these very strange things on a day where you saw, and which is why you see tens of thousands of people. They were just here over the weekend right by the Brandenburg Gate to protest what's going on here, and particularly, again, where you have Olaf Scholz in Poland right now to mark the anniversary of the liberation of Auschwitz. All of these things creating a lot of tension within the German political establishment, and frankly, a German political establishment that doesn't really know how to deal with it. As far as how it's affecting the polls, more or less the same, 30% over at the CDU and the AfD following behind. But again, this is something that this establishment is not braced for. This is not something that German politics has had to deal with in the past.
Yes, and all of those established parties have for some time operated this firewall against the far right then, Ollie, kept the AfD away from the levers of power. Now, though, the CDU, the centre-right, being accused by the left of cozying up to the AfD. What do you make of these allegations against Friedrich Merz and his immigration policies?
Yeah, so listen, there's a degree to which this, the AfD, even if they're not going to get into power here, and I don't think that that firewall will be broken this election cycle, but it has moved the entire political discussion within Germany, even with the SPD, on the issue of immigration further to the right. What the Merz is trying to do and the CDU is trying to do is now introduce legislation that goes much harder on immigration, and he basically floated this idea that he doesn't really care who gets behind it because they're sort of agnostic. They're really focused on the policy outcome, not who sort of backs it. Of course, this got a lot of backlash from the political establishment, and he moved back and he changed some of that legislation they're trying to propose in order to make it very, very unpalatable for the AfD to get behind it, because they basically got language in there that would criticize the AfD, very, very directly. So this is something that they don't really know how to deal with, and there's a degree to which Alice Weidel has certainly been playing on this, that they don't feel that there is a choice for the right, because even if the CDU wins, it's going to have to go into coalition with the left.
Thanks, Ollie. Bloomberg's Oliver Crook there with the latest on German politics. So that's the German politics, which, of course, with the month ahead, we mustn't lose sight of. Here and now, the tech theme really writ large across these markets, Chrissy.
Yeah, so let's get a quick check on those, because NASDAQ futures are really feeling the pain here, down a whopping 3% when you look at the futures picture over in the States. U.S. futures right on their heels, down about 2% as well. If you look at the chips picture, though, that's where a lot of the kind of read-through is right here in Europe. We're going to get into some of those individual names, but you can see it across the European sector there. ASML down a whopping 8%. Some names as much as 12%, we'll call it there as well. And the industrial names as well, also taking a beating.
It's fascinating. So it's the data center names that are actually in some ways taking some of the biggest hits here. Siemens Energy's in the SOX 600 has taken the biggest hit, but it's names like Munters Group, which does cooling for data centers. That is where the hit is coming through this morning. It's fascinating to see Schneider down by 7.3%.
Yeah.
So it's not just limited to tech this morning.
Yeah.
It's the ripple into the rest of the economy, the kind of the data center story, and then further. That is interesting.
Really fascinating to get clarity then on just how cheaply are the Chinese able to do this inference and the training and the inference, as Richard Windsor was saying, and we will have to wait a little while until we get that clarity. And then if it is cheaper, how much demand does that create? So it feels as if this is not the end of the story, even if the direction of travel right now is downwards.
It creates a really interesting correlation, though, all of a sudden with some of the commodity costs that are inputted into it and some of the tech space costs as well, which isn't a correlation that's really showed up yet in these markets.
Is electricity, if you do more of it, you use more electricity, but if it's cheaper to do it, then maybe use less electricity. The energy story, absolutely front and centre. EFO, data about to break. We'll get some analysis on that. That's next. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Nasdaq futures and global tech stocks extend their losses on fears the AI race may no longer be America's to lose. Chinese upstart DeepSeek unveils a cost-effective model that runs on less advanced chips. While President Donald Trump announced sweeping tariffs on Colombia before abruptly pulling the threat after reaching a deal on the return of deported migrants, plus Bitcoin dips below 100,000 as traders take profits just days after President Trump's executive order for the crypto industry. So let's really delve into the markets. They tell the story of the AI supremacy in the U.S. being challenged by China and DeepSeek as there's been more and more a concern over the weekend that they were doing it faster and cheaper. This is a picture overall for Nasdaq futures. You can see down 3%. We'll look at NVIDIA stock also pre-market and a couple of really big things that we need to keep an eye on. European stocks down 0.7%. Look, cross-asset, I'd watch out for dollar, but also Bitcoin. So a couple of things that have been happening over the weekend is also after Donald Trump last week, of course, putting Bitcoin at the start or an executive order putting it really in the middle of his presidency. We're now seeing it below 100,000, 99,000 there for Bitcoin. The U.S. 10-year yield 4.5404, and of course, dollar. Above all, because of the concern over trade. Now, Chinese AI startup DeepSeek, again, rocking global tech stocks, raising questions over America's technological dominance. So you can see it really playing across the board with B Semiconductor down 11%, ASM International, and then ASML, the big one here in Europe, down 8% as well. This, I guess, challenges NVIDIA. NVIDIA pre-market also down 8%, so we'll have a very big roundup of exactly what this means for the AI race being maybe more kickstarted. Remember, just a couple of days ago, we thought that China was far behind what the U.S. could do. Not so, according to reports over the weekend. We also look ahead to the German election. That's February 23rd. We speak to Clemens Fust of IFO, that German January IFO business conference coming in at 85.1, pretty much in line with estimates. So Clemens Fust is coming on shortly. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone. Happy Monday and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Donald Trump has called for boosting U.S. dominance in AI with an executive order scrapping former President Joe Biden's approach to the emerging technology. However, Chinese AI startup DeepSeek has rocked global technology stocks, really raising questions over America's tech dominance. Buzz grew over the weekend about the company's latest AI model being cost-effective while running on reduced capability chips. Now, for more on all of this, let's bring in Bloomberg's EMEA News Director, Ross Matheson, also with us to talk markets for the next 15 minutes. Emmanuel Ko, Head of European Equity Strategy at Barclays. So thank you both for joining us. Ross, what a way to get started on a Monday. I mean, this company, if you're in the know, you knew that this company had something to offer. You knew that this challenges the U.S. Can Donald Trump do anything about it?
What's interesting, as you say, it feels like this company came out of nowhere, but in a way it shouldn't be that surprising that it has, because China's made very clear as part of its priorities with tech, it's really pushing self-sufficiency, and that's a really aggressive approach to AI, not just chips, but AI. And you can see that they've been working very hard on this. So in a way, this is not that surprising. But obviously, the reviews are very positive on it so far for this company, for its product, and putting into question the very high valuations of some of the tech companies around the world. And really a message to Donald Trump out of this is we are pushing hard on self-sufficiency. Whatever we're doing to realign global supply chains, to squeeze China out, to reroute some of our supply chains, China is still there and still being very busy and very much making this a national priority. So where does that leave Donald Trump? What does he do with AI companies in the US? How does he support them? I mean, he's already saying he's going to unshackle regulation and they should just go for it. But separately, what does that look like? So really quite a startling development when it comes to the US-China relationship in the tech space.
And I want to come to the markets in a second, but Rosa, I feel like the news cycle will really be dominated by AI and Donald Trump on the geopolitics. So we saw Donald Trump impose then rescind tariffs on Colombia because he got what he wanted. Is this going to be, are we going to see countries after country do the same?
Very much a reminder of how he's going to dominate. I mean, it was quite a dizzying turn of events over, 12 hours or so, where he said he was going to impose tariffs and sanctions, and then in a way he stepped back, sort of reversed on that as Colombia reversed. And the point of contention there was really not so much about sending people back, but the way they were being sent back, putting them in shackles and chains. And obviously they reached some kind of understanding on that. But just how quickly Donald Trump was ready to say, fine, I don't like what you're doing, so I'm going to put tariffs on. Here we go. And immediately. And maybe you can do that with Colombia, a country like Colombia, and you can negotiate your way out of it. But what happens if he tries to do that very quickly, almost on a whim in a way, because he doesn't like what another country has said or done? If he does that to Germany or France or Canada or Australia or the UK, how those countries might react, or China, could be very different. And so when you're doing stuff on the fly in a way which is really significant for the global, supply chain, for trade, for economies, for politics, and making those decisions very, very quickly. I mean, interesting to see he was willing to roll it back again very quickly. He does like to change his mind, but that's just going to keep everybody on their toes going forward.
Emmanuel, what does this mean all for the markets? Again, you're, with your AI lens and technology lens, if you're in the know, that we knew that this would have put a race between China and the U.S., but stocks in Europe are getting slammed if you're tech-related today.
Indeed, but I think tech has been very central to the U.S. exceptionalism, and I think this moment had to happen, right? We know that at some point, new entrants, cheaper entrants, will challenge the dominance of some of the big tech companies in the U.S. So I think this is a reality check. This is going to force investors to see tech not as a one-way trade anymore. I think it could end up a great buying opportunity because it's very early to say whether DeepSeek is going to be completely changing the model or not. We still don't know how much we need to power DeepSeek, etc. But I think for the time being, it gives a chance to the non-tech heavy equity market, and Europe is shining today. Europe is down a little compared to the US. So as long as big tech in the US is being challenged, I think we can see a little bit of catch-up for non-tech in heavy markets. And again, this is putting diversification back at the center of the investment process. People forgot about diversification, and think people will think about having non-tech exposure as well in their portfolio.
But ASML is also getting slammed today, right? I know it's a smaller percentage than what the Magnificent Seven are for the U.S., but do you assume that all tech stocks now are priced to perfection, and so we could see a lot of volatility if they get challenged?
Yeah, I think the valuation gives very little cushion to the space, so we are left with earnings to do the heavy lifting. It's a very busy week for tech earnings. We've got ASML on Wednesday, SAP tomorrow, big tech in the US later this week. So I will not get carried away. There's a bit of sell first, think later type of market behavior today. Again, positioning is very heavy on the space, but I think the earnings story for AI is still not over in my view, right?
I mean, Europe will probably at some point have to confront Donald Trump with extra tariffs or very harsh words. Actually, it was incredible to see Donald Trump and Keir Starmer get along over the weekend, right, in this phone call since he entered the White House. How do you play that? Well,
we think Trump is kind of unpredictable, but transactional. He wants to use trade tariff leverage to bargain to get something from Europe, whether it's more buying of energy, LNG, more defense spending. So our assumption for this year is that Trumponomics won't be as aggressive as what Trump has been talking about. So the implementation is softer than what has been threatened by Trump. But look, this is going to create volatility along the way. But I think week one was a little bit of relief with tariff not being implemented. And as we saw with Colombia yesterday, there is still some room for negotiation here.
Roz, I mean, we heard, the Gulf of Mexico now being called the Gulf of America. I know Elon Musk also tweeted about the channel, the sea, being called, I think, the George Washington Sea. I mean, is that just noise?
In a way it is. I mean, some of this is stuff that you can say you want to do, but can you actually do it? Or can you get tied up in a whole lot of red tape and legalities to get something done? I mean, it obviously plays very well to your voting base to be saying these things. I mean, someone was calling for Trump to already be chiseled into Mount Rushmore, I saw on the weekend. And again, the ongoing stuff about Greenland, I mean, we saw fresh noise on that. I mean, that actually is a very tricky relationship that Denmark's going to have to manage in this. And we can see that Trump's not going to let that one go because he's been told by somebody about how big it is and it's full of minerals and so on. And so he wants to see what the US can leverage out of that, to the point that man was just making about leverage with Trump. It's all about that. And so that is something that's very real. I mean, all jokes aside about Greenland and Trump and so on, he's definitely got an agenda there.
I mean, it doesn't matter to earnings, or does it? So we have fourth quarter earnings. Do we, start seeing chief executives worrying about the geopolitics, or is this going to be a straight earnings season?
Look, I think there is no reward for CEOs to commit too much to a very strong guidance for this year. I think there's a lot of uncertainty, a lot to pay for. But look, I think the macro backdrop is pretty decent, right? For the time being, rates have gone up, but they're quite stable now. Trump seems to be a bit more willing to negotiate. We see some green shot in European data. There is clearly some animal spirit in the US. We see business expectation really picking up. So, of course, there is uncertainty. There is always uncertainty. But I think the private sector should still be pretty confident about their look, even though, maybe not all of them will commit to very strong guidance and forecast for this year.
Okay, thanks so much, Emmanuel. We'll come back to you, and we'll also talk a little bit more about your play on cyclicals. Emmanuel Coder from Barclays stays with us, and thank you to Bloomberg's EMEA News Director, Roz Matheson. As you've heard, plenty more to come, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
We talk a lot about tech today because of the surprise by DeepSeek in China, really putting in question the supremacy of the U.S. in AI for much longer. And so maybe this is oversold, or not oversold, but maybe oversold. NVIDIA down 6.8%. So we'll have to see, of course, pre-market how that adjusts. Still with us, Emmanuel Ko, head of European equity strategy at Barclays. Emmanuel, I mean, it's very clear we're dominated by AI, and there's one show in town, and that's Donald Trump. Yeah, I mean, look, on equities, you were very clear that Europe could maybe benefit from some of the air taken out of the U.S. But what's your take on what Trump does in terms of tariffs, what it means for the Fed and inflation?
So we said at the beginning of the year there are three key words for 2025: Trump, AI, and rates. So here we are. We are not disappointed so far. Look, I think our base case for Trump is that action will be softer than words. Whatever that means, it might take time to find out what he will be doing, but we don't see mass deportation. We see less tariff than what was planned initially, and we don't see new tax cuts, right? So Trump inherited a very high equity market. Rates are very high. Dollar is very high. So this U.S. exceptionalism is quite fragile, and I think there is very little margin for error for Trump, right? So if something goes wrong, he can easily take the market down or push up interest rate. So he told us last week in Davos he wants rates to go down. Well, a lot of his policies are inflationary. So I think it would have to be balanced by disinflationary policies, right, for example. So, look, I think it's very early to say, but our view that pragmatism will prevail, and ultimately U.S. exceptionalism cannot go too much at the expense of the rest of the world. And for Trump to really strengthen the U.S. economy, he will probably have to compromise on trade, tariff, or some of the global policies.
I mean, this is a big worry, right, that it's really winner takes all. And I've even heard, some calling the U.S. like a predator right now. So what that means for Europe. Where do you see deals in Europe?
Look, I think there is willingness for Europe to compromise, whether it's on more defense spending, more energy import from the US. I think this is going to force Europe to take care of itself. I think deregulation is going to be the new theme for this year. Obviously, Europe may have to follow the lead from the US. And look, no one will talk about the Draghi report. It came out 3 months ago, and I think the Draghi report will be back on the table. It's full of very interesting, pragmatic proposals, which are not necessarily very costly to implement. And I think Europe will need to come together to, fight against the US. And look, I think the German election in this regard could be a catalyst, because if you see a shift toward a bit more pro-growth, pro-reform change in Germany, I think that might open the door to a stronger European leadership, which can basically negotiate or bargain with Trump.
I mean, is the money there? So the Draghi reports talk about competitive also in finding money. Do you see, money in companies but not being spent because of the questions they have? Yeah,
I think there is a lot of uncertainty forcing companies to focus on capital preservation and cost management. But look, like what we are seeing in banks, for example, we start to see M&A, cross-border deals. So I think the private sector is in very good shape in Europe. Governments less so, but corporates have the ability to get stronger, right? So I think there is money in the private sector. There is money in Germany. Germany has fiscal capacities. They can spend more to grow their economy. And again, a lot of Draghi's proposals are not necessarily expensive to implement. Deregulation can be a very cost-effective way to boost your economy. It's going to take time, but I think we need to get there if you want to compete with the US.
We had, I guess, a glimpse of, for example, the resurgence of luxury stocks last week. That was due partly in China, but also millennial spending. I know you're also focused on cyclicals. How much does it really depend on what sector you're at or what kind of a strong company you have?
Sure. I mean, we want to own cyclicality in this environment. We think the U.S. will export strength to the global economy. We see some green shots in Europe. Disinflation should help the consumer. So we like the consumer as a global team. We like the top-end consumer in the U.S., which is why we went back to luxury at the end of last year. We like the low-end consumer in Europe. It's very much a play on lower interest rate and disinflation. Look, I still believe some of the secular growth team in electrification tech are still there. But of course, they are very consensus, very expensive. So you have to diversify away from that. That's why we like financials very much. We think financials are back in the game, whether it's insurance, diversified financials, banks.
European ones?
Yes, European ones, absolutely. They benefit from a broad reflationary impulse, but I think the price to pay is not very high in Europe, and you have this corporate activity, self-help potential, whether it's buybacks or M&A, as a bit of an addition to the macro drivers behind it.
But Emmanuel, is this basically taking advantage of like collateral benefits of what's happening in the U.S.? Because regulation here will, if not loosen, certainly, I guess, take a pause.
Look, that's obviously a call on that. I think a lot of banks in Europe might benefit from looser deregulation in the US. the boom in capital market activity, M&A, but also I think, and again, coming back to this M&A team in Europe, banks, I think that's something that might open the door to more sector-friendly type of policy environment.
But what's the one thing that you worry about for this year?
Look, AI is very central to the structure of the market. We like the long-term growth aspect of the team, but the positioning and the valuation are quite expensive. And obviously, there is a lot of money parked in this part of the market, right? So if something goes wrong, if this is basically a bubble, then you can see a bit of a domino effect on market. That's why you need to be diversified. And I can see some merit being in Europe in particular as a way to hedge this big tech dominance in the US. So that's something to watch. As I said, Trump, number 2, and rates number 3. We've got the Fed meeting on Wednesday, ECB on Thursday. Look, our assumption that inflation will be down. So we are in the disinflation trade, but it's not linear, it's not smooth, and obviously rates are close to 5%, which might become an issue. If rates break above the 5% threshold, I think that's going to start to hit the equity market again. So something to watch.
Emmanuel, thank you so much. Emmanuel Coder, Head of European Equity Strategy at Barclays. Now, coming up, German companies unexpectedly became more pessimistic at the start of the year. That's according to data from the IFO Institute. So we'll discuss all of this with Clement Fust, the IFO Institute president, next. And this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
So So German companies unexpectedly became more pessimistic at the start of the year, with the IFO's Institute Expectation Index falling to 84.2. So let's get straight to Clemens Fuß, the IFO Institute president. Mr. Fuß, as always, thanks so much for joining us. Look, in his first few days in office, Donald Trump has clearly again threatened Europe with tariffs. How bad could the consequences for Germany be?
The consequences could be very bad. Germany is an export-oriented economy. At the same time, currently exports are struggling. We see in today's IFO index that companies are reporting a further decline in incoming orders. So the German export industry, which used to be very competitive, is struggling currently. So tariffs on top of that would be very bad news indeed.
The German economy already shrank for a second consecutive year in 2024. How big is the risk of another contraction in 2025?
The risk is clearly there, and whether that happens will depend, among other things, on what Donald Trump does and how the Europeans react. We currently expect a small growth rate, a small amount of positive growth, but there's a lot of uncertainty around, so it's not clear that's happening. I think the overall picture is that the German economy is stagnating. So it's, the growth rates have been negative but very small. It's more of a stagnation, and of course it would be very important to get out of that. But with Trump increasing uncertainty, with political uncertainty in Germany due to the elections ahead, companies wait before they invest. So it will be another difficult year.
What should the top priorities be for the next government?
The top priority is to come up with an economic reform program that addresses some structural issues: energy prices, high taxes, regulation, bureaucracy. These things need to be addressed so that investors get more confidence and are more confident to invest in Germany. We need a consistent economic reform program. This is needed more than short-term stimulus.
Thank you so much for joining us. Clemens Fuß, there, president of the IFO Institute, with, of course, a lot going on looking ahead to that election in Germany, February 23rd. Now, coming up, global tech stocks extend losses as Chinese AI startup DeepSeek sparks fears over American dominance of the industry. That story's next, and this is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. NASDAQ futures and global tech stocks extend their losses on fears the AI race may no longer be America's to lose. Now, Chinese upstart DeepSeek unveils a cost-effective model that runs on less advanced chips. While President Donald Trump announced sweeping tariffs on Colombia before abruptly pulling the threat after reaching a deal on the return of deported migrants. Plus, Bitcoin dips below 100,000 as traders take profits just days after President Trump's executive order for the crypto industry. So back to our top story, and ASML shares have tanked along with global tech stocks. NVIDIA leading falls in U.S. pre-market. Now it comes amid concern that AI models from DeepSeek would disrupt U.S. technological leadership. Let's get more with Tom McKenzie, our Daybreak Europe anchor. So, Tom, I mean, this feels like a big deal because actually the people in the know knew that, there was fierce competition from China and that they could come up with something like this. But it seems the market was oblivious.
Yeah, I mean, as our team at Bloomberg Intelligence have been saying, they've been looking into this company for 7 months. But they have come out with this new model. It is open source, so you can see all of their less than secret source in there. They are opening it up. It poses some really important questions, and that's what the markets are grappling with today. One question it doesn't pose is whether or not AI innovation is going to continue. That question has been answered. AI innovation will continue. It may even accelerate as a result of this. The questions it poses are, does NVIDIA still, with the market valuation that it has, still command that role as the chief supplier of these AI accelerators? Is it still that essential company? Because if DeepSeek is showing, and the data suggests it is, that it can build a model that has the same capabilities of OpenAI and Anthropic and DeepMind with chips that are older, using systems engineers, so they've built a model, very sophisticated, at their research lab, that has the same capabilities but uses cheaper and older chips, then what does that say about NVIDIA and its Blackwell AI accelerators, the most cutting-edge AI accelerators? Are those needed if you can build capabilities on cheaper legacy chips that seemingly DeepSeek has done? So that is a question it raises. And then again, it raises the question around the competitive challenge and the gap between the US and China. And that seems to be what the markets are grappling with right now. But the primacy is the focus on NVIDIA and the hyperscalers who have committed to spending around $80 billion. And only on Friday, Zuckerberg came out and said Meta is going to be ramping up its capex higher than analysts had expected.
Tom, thank you so much. Tom McKenzie there with the very latest on DeepSeek. Now, my next guest says AI was a massive driver of returns last year, but the real test going forward will be on productivity. Is AI helping businesses control costs, increase output, or both? Well, joining us now, Piers Hillier, Chief Investment Officer at Royal London Asset Management. Piers, thank you so much for joining us. I mean, it feels like the price to perfection, and some say, look, it's about time that the Magnificent Seven got a bit of a shaking from China, because it would also put Europe on a better footing. But where are you on AI right now?
Look, I think it's a really important breakthrough. If I think in our own company, we're using tools actually to enable us to make better decisions, to operate faster, but it's still, I think, very much at the sort of early stage in its application. So the challenge this morning, in some ways, is that is there a threat to the sort of the hegemony that everyone has assumed to date, driven by NVIDIA, etc. And look, you've got most of the major players reporting in the next week, which will give you a sense of where capex is, and that's been the real driver of NVIDIA. And fundamentally, that company, the underlying earnings have grown 11-fold, shares are up 7-fold. So it's not as though you've gone through through sort of a big re-rating. And a lot of people say to me, are we at a sort of dot-com bubble type scenario? And there are scenarios of that. There are a couple of companies that have those kind of 100-plus earnings multiples. But when it comes back to looking at AI, our view is that, yes, everyone's now understood that it's going to be really important, but it's trying to understand, now that that's a sort of well-known and well-trodden path, and we'll continue to monitor growth there, and we still do play in that space. It's more just a question of how do we and you and others in industry use this? Is it effectively a cost-controlling function? Does it enable additional innovation? So one of the things we found really interesting talking to healthcare companies is actually the speed of throughput through phase 1, phase 2, phase 3 in terms of productivity. Those gains can be really, really significant in terms of the cost of drugs and drug delivery, as an example.
Yeah, and this is about the protein folding, and for example, they do AlphaFold. There's a large language models, there's generative AI. Are we bundling everything together without, there will be winners and losers. And so unless you have a clear blueprint of what the future in AI looks like, it can get messy along the way.
Yeah, I use the analogy, sort of, if you go back to sort of 2000, and everyone just assumed that the use of the internet actually has not, yes, there have been the technology companies that have been winners of that, but actually the biggest winners are probably you and I in terms of how much more efficient our lives are. The telephone in your hand, in terms of the things you do with it and its productivity. The same scenario in some ways plays out with AI in terms of enabling you to make better, quicker, faster decisions. So to me, that's the iteration from here. Now, have I really seen something that's wows me? And I look at so you've got an iPhone, I've got one too, right? But if I look at sort of AI in the iPhone, is it a real breakthrough? I want to go and buy the iPhone 16. Is it that convincing to me? And my best barometer actually are my children, who are probably better users of these things. Yes, it's interesting for them at this stage, but is it a real breakthrough in terms of, do I see something them showing me, go, wow, that's a real transformational piece? No, I've not seen that in the consumer space yet. Where I am seeing it, though, is actually in business applications. So a lot of the classic sort of control functions, a lot of the sort of, where we've had task-based activity, those things being automated, and actually the security of record keeping as well has been another step forward. We've been using something around how do we evidence our ability to engage with companies, and how do we show that to clients? And we can look at across all of the asset classes, so how we interact with businesses, whether we rent a building to them, whether we're actually investing in their equity, or whether we lend money to them. We can see our interaction with that company. We can talk to clients about how we're engaging, how we're delivering better outcomes. And that's really quite fun when you get all of your team, whether it's our ops team, it's our distribution team, it's our front office investors coming together, and we use something called the hackathon to do this. And to me, we're still at that early foothills of innovation.
Piers, when you look at a lot of inflation concerns surrounding the second term of President Trump, I mean, is this really what it's all about? So what happens to dollar, what happens to tariffs, and whether the Fed can even cut this year?
Well, I think you make a really good point there, because actually the state of the U.S. economy is pretty good. And I think this is the problem that Donald has, is the reality that actually, Powell has got a really fine balance to tread between an inflationary backdrop that's actually still strong, wage inflation. It's stronger here actually in the UK than in the US, but it's still pretty strong. Japan has got the same problem. Why are they raising rates? Because actually wage inflation is going up. That's the structural piece. Why we've talked about higher for longer in terms of interest rates has been this nervousness that we haven't really solved that problem yet. So I think we're much more of expectation that the Fed waits to see a little bit more about what happens. Now, on the tariff side of things, I think it's a classic thing that you put these threats in. It's the art of the negotiation. It brings you to the table. How can we strike a deal? Now, look, I mean, the Columbia one last night was nothing to do with tariffs.
Is it the blueprint?
But it is a sense of how do I bring you to the table to have a sensible conversation? And I think, look, what was an interesting change last week, having really been quite scathing of the Starmer government, actually a much more positive tone, and possibly being the first visit outside the United States to come to the UK, says something about who are the people we want to do business with. And I think, Keir Starmer and as you heard in Davos last week from Rachel Reeves, they want to try and evidence the UK being open for business. And I think that message to say, look, we'd like to do more trade with you. Actually, you've got a trade surplus with us, not the other way around. It's quite an important start.
It's an important start, but it must be very difficult to separate the noise from the fundamentals when you make business decisions, right? When you're investing in the market.
It is, but if anything, it probably is more likely links to that onshoring piece that we talked about for a long period of time. And I think there is still, even with the AI breakthrough in China today, there will be a degree of concern and nervousness behind that. that in terms of the monitoring that takes place. So the message around bringing it back to the United States remains. I think Europe has to lean in and think about how do we do more with the United States? How do we tackle this issue? And if Trump manages to convince Ukraine and Russia to come together in the way that he's achieved in the Middle East, Europe needs to make sure it's been part of that narrative. And that will really help us in terms of more trade with the United States, not less, the tariffs being smaller rather than larger.
What are you expecting dollar to do in this? And again, if you get dollar right, probably you get 95% of your investment strategy right.
I think that's right. I mean, the dollar's been pretty strong for a reason, because actually you don't really need to cut rates. I mean, we're teetering here in the UK as to whether we should cut or not. Europe clearly should be cutting, right? And so that's why you've had dollar strength. For me, the thing that changes away from dollar strength will be either because Japan has to keep raising rates, and so you get a degree of yen strength for the first time in 3 years, or actually economic growth starts to improve in other parts of the world, and we've not seen that yet.
Are you expecting that, or is it,
I think so.
The US takes all?
Yeah, I mean, yes, the wage inflation bit, it's always the last domino to fall, but it's been stubbornly strong. I mean, here in the UK, when we put through, minimum wage increase of over 6%, that feeds through to the lower levels, and then you tack on, national insurance increases. It does make it difficult for businesses to continue to invest when that inflationary backdrop is real.
Piers, what's your take on the UK? John Micklethwaite spoke to, of course, the business secretary and the chancellor in Davos. I mean, it was a market-moving interview, because we also got her thoughts on, non-DOMs and the fact that she's a bit more flexible maybe than people thought.
Look, I thought it was a great interview. It was probably, it was a standout from last week. Really, in terms of giving an insight, a total change of narrative. So ever since the budget, the consumer confidence data, business confidence data, have all been negative because of the costs associated with the budget. And steps that had to be taken. We always knew it's going to be painful in year one of a new government. It's the kind of thing you do, and then you ease the pain as you get close to the next election. But this is really important this week in terms of what they talk about growth. How do you show an evidence that the UK is open for business? And for us, as Royal London, a critical part for us is we help people save for the long term. Pension reform is really, really crucial. If we can increase the pension contribution rates, and incentivise investment into the UK, actually, the UK economy could grow very quickly from here.
Okay, Piers, so good to speak to you. Thank you so much for coming on today. There was Piers Hillier, Chief Investment Officer at Royal London Asset Management. Coming up, Ryanair shares jump after a stronger than expected performance in the third quarter. We'll have plenty more on that next, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Wednesday, The Fed decides.
The Federal Reserve has gone from projecting 4 cuts in 2025 to just 2.
The road may be bumpier than folks thought.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How divorced can you say you are from the global market? How much can you talk about American exceptionalism?
This is not a snooze fest. There's a lot going on here.
Could not agree more.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
I've seen notable improvements on the ground. Things are definitely improving. The quality of the fuselage is coming in from Wichita Spirit, much improved. So I'd have a high level of confidence that the additional 9 aircraft that we need this side of the summer to get to 181 game changers and that to deliver those 206 million passengers will happen. I'd equally have a relatively high level of confidence that the remaining 29 aircraft in our 210 order book will be delivered ahead of next summer, the summer of 2026, which will enable us then to catch up a lot of the growth that we've lost this year to get to 215 million passengers. So I think Boeing have turned the corner. On the production side of things, they fixed their balance sheet last year. The management team are executing on the plan. Of course, we're disappointed that we're going to be left short aircraft again this summer, but we are operating into a capacity-constrained market. If you look at the Airbus operators, they're behind on their deliveries. They've got the issues with the Pratt & Whitney engines. So I think capacity is going to be hugely constrained this summer, our own included. We had hoped to carry 210 million passengers. We're now carrying 206. So that potentially, I think, will be a positive for fares into the summer going forward.
It's the second time that you've lowered the passenger growth target.
It is.
Is that it? Are we done?
Yeah, as I said, I'd have a high level of confidence that those aircraft will come in. I saw a number of them in the factory when I was there. The rest are either on rail carts or manufactured, the hulls in Spirit and Wichita. So they're good to go. We can physically see those 9 fuselages at this point in time. And then it's a case of getting, as I said, the remaining 29 in ahead of the summer of 2026.
Ahead of the summer of 2026, that's the additional 29. But you're getting 9 before the current summer season.
We'll get another 9 in with 172 game changers out of a fleet of 609 aircraft at the end of December. So we get another 9 aircraft in ahead of peak summer.
What is demand looking like?
Demand is very strong. It's robust at this point in time. People are still as keen as ever to get away. And, we've 164 new routes out of 2,600 routes this summer, all booking well. Now, it's too early to call where the final pricing will come out, but I'm pleased with what we're seeing so far.
Neil Sorahan there, Chief Financial Officer of Ryanair, speaking to Tom this morning. Now, the airline also revealed it's cutting its passenger growth target for a second time in 3 months amid Boeing delays. Well, meanwhile, the UK Chancellor Rachel Reeves has hinted she's preparing to greenlight a 3rd runway at Heathrow Airport despite cabinet splits. Well, Bloomberg's global lead, Benedict Camel, joins us now. Benny, thank you for joining us. So Ryanair's share price ticking higher this morning. Why is that?
Well, if you listen to what the CFO just said this morning to us, there's a lot of confidence coming from him. He said he's confident about the outlook. The demand is robust. People are still traveling. With regards to Boeing, that's their sole aircraft provider. He said they've turned the corner. He was recently up there on the East Coast, on the West Coast in Seattle, checking out the progress. And he said, I'm liking what I'm seeing. The company has improved overall. So really a very positive picture coming out of the airline. Yes, they have cut their growth target for passengers, but it's not their fault. It's because they're not getting the aircraft. And if you turn that on its head, it means that the demand is there, the capacity isn't, and that means they can probably command higher prices. So again, people are choosing, investors are choosing to look at this as a glass half full kind of situation, and you see it in the stock price this morning.
Benny, remind us of the issues facing Boeing and their effect on airlines.
Well, Boeing's been through a very tough year, and they had the strike towards the end of the year. That really pretty much stopped production for the entire quarter. And Ryanair is the only they only buy Boeing aircraft. They don't have any Airbus, so they are really dependent on Boeing delivering these aircraft, and that didn't happen last year. It had been slow before even that strike, but that really exacerbated things. So as we heard this morning, they're not getting the number of aircraft they need. That means that they have to take some routes out of the network, they have to reallocate some aircraft, and as a result, they can't really serve all the routes that they wanted to. But again, the constraints are everywhere. It's not just Boeing, it's also with Airbus. They've had issues getting the aircraft to the customers. This remains a very hot market. People want to travel. People want to go on these short getaways. You're seeing it in the numbers, and the capacity isn't there. The aircraft aren't there. But for the airlines, that means that they can command higher prices, and that's why people are fairly upbeat about the stock price this morning.
Benny, meanwhile, UK Chancellor Rachel Reeves also hinted at building a third runway at Heathrow. What obstacles is she facing?
Well, this is a long-running saga, really, the Heathrow expansion. I mean, I've been covering this industry for more than a decade, and for all that time, there's been talk of a third runway. There's been talk of actually building a new airport elsewhere, Boris Island it was called at some point. So, I'll believe it when I see it. This is a complicated thing to do. There's a lot of regulation, there's political opposition. This is a very densely populated area in South London. A lot of people don't want more aircraft noise overhead. So she will run into all sorts of issues here on the political front, on the financial front, on the actual planning front. This is not Istanbul or Dubai or Doha where you can sort of say, I want a new runway, and it happens very quickly. So these things take a lot of time. I thought it was interesting hearing from her in Davos last week, where she sort of tried to put a brave face on it and say, we can't always say no. We need growth. This country needs growth. And airports are one key trajectory towards that kind of growth. So whether she gets her way, that's another matter. But certainly Heathrow is a crown jewel with everything that has to do with growth in the UK, and the UK will be keen to protect that.
Benny, thanks so much. Bloomberg's Benny Camel there on everything aviation. Now, returning to our top story this morning, Chinese AI startup DeepSeek is rocking global tech stocks and raising questions over America's technological dominance. You can see quite a lot of pressure intraday for ASML, for example, down 10%, but also ASM International down 14%. U.S. tech pre-market, NVIDIA not having a great day either, and so many questions about what this means for their more sophisticated chips. Longer term, NVIDIA pre-market down 9.7%. Coming up 4 weeks before Germany's snap election, and the political temperature is rising as tens of thousands marched across the country over the weekend to protest against the AfD. More on that next, and this is Bloomberg.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Well, tens of thousands of people marched in German cities over the weekend in protest against the far-right AfD party. Meanwhile, Elon Musk, who has been a vocal supporter of the AfD, made a surprise virtual appearance at the party's campaign launch on Saturday. Now, for more on this, Bloomberg's Christoph Rauwald joins us. Christoph, good morning. So Elon Musk weighed in on the German elections again over the weekend. What were the reactions on the ground?
Yeah, good morning, Francine. This was actually, he made some remarks that again caused quite a few waves. As you mentioned, he addressed via video stream a party gathering of the AfD that was happening over the weekend in the eastern German city of Halle. He essentially reiterated his support for the AfD and for their chancellor candidate, Alice Weidel, who is, basically at the moment second in the polls behind the conservative leader Friedrich Merz. And the comments from Merz that actually ruffled some feathers were some comments that he made after he reiterating his support. And those basically made a point that German citizens or German people should maybe not worry so much about historic responsibility and what happened in the past in German history, but also essentially look more ahead. And that, of course, has been a highly controversial statement given that political leaders this week meet in Poland to commemorate the 80th anniversary or the ceremony to basically commemorate the liberation of the Nazi death camp in Auschwitz. So the timing and the context of these stories, of the comments that Elon Musk made in Eastern Germany were highly complicated, I would say.
Christoph, the German opposition leader, Friedrich Merz, has also caused headlines with proposals to fight illegal immigration. What are the main points?
Well, his main point is essentially that he wants to crack down much tougher than what has Germany done so far in terms of stopping illegal immigration into Germany. That includes one filing which he plans to push forward to a vote in Parliament this week, and it means that Germany would be able to send back sort of undocumented illegal immigrants, basically people who come to Germany and don't have the documents that shows that they have a right to stay in Germany, to send these people back. And that has also stoked the internal debate, the public discourse here, and also triggered quite a bit of a backlash from his political opponents, particularly Chancellor Olaf Scholz, who essentially criticized him for watering down the so-called firewall to the AfD.
Yeah. Christoph, thanks so much. As always, Christoph Rauwald there with the very latest on Germany. U.S. futures, especially NASDAQ, really lower on the back of DeepSeek from China. Up next, Bloomberg Brief, Danny Berger, Manus Cranny in New York, and this is Bloomberg.
about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in now a GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
A global risk sell-off. NASDAQ futures fall more than 3%. Bonds rally. The 2025 optimism for markets gets a challenge from tariffs and tech. U.S. tech exceptionalism threatened by Chinese AI startup DeepSeek with a cost-effective solution for AI. And a compromise agreed in the standoff between President Trump and Colombia on the threat of sweeping tariffs. Good morning, Manus.
Danny, good morning. The first grey swan of 2025 afflicting NVIDIA and the global tech market. We're now down 10%. $300 billion worth of market cap has been wiped off NVIDIA and counting. There's one word, DeepSeek. Go Google it. Chinese startup, more effective AI, cost-effective, less power. Roll it over and have a look at the effect on equity markets. NASDAQ down 3.4%. We've now almost wiped out the gains of 2025. Last week, we talked about Goldilocks on steroids. Is that challenged? We've only seen drops of 3%, 3 times in 2024. Ground zero, as equities come under pressure in this grey swan moment, you go straight to the bond market. We are seeing yields fall. The question is the scale of the existential angst from the equity market as yields drop by 8 basis points, Danny, in the bond market.
Yeah, if you thought you were going to get a quiet start to what otherwise will be a busy week, you've been sorely mistaken this morning.
Very mistaken.
There are also some other stocks, a lot of stocks that have been selling off with the DeepSeek concern that's been coming through. ASML is one of them. Let's just get the pre-market check on that, Manus. Those shares are off 10.7%.
Other stocks, the question is this about the moat around U.S. exceptionalism of NVIDIA and therefore the moat around all the other majors in the tech sector. Broadcom also falling again on these AI concerns. as a result of, you got it, DeepSeek.
And just all those big spenders also falling, Microsoft being one of them. Any of the ones that have been spending a lot of AI falling, Microsoft off nearly 5% in the pre-market session.
Also coming up, we'll catch up with Ella Hodja of Newton Investment Management. Amy Wu-Silverman, if you want to understand volatility, join in at 5:30. RBC Capital Markets 101. That's a 101 for vol.
One of my favorite things that anyone has written about this is James Van Gielen of Citrini Research saying, picks and shovels to dig your own grave.
Exactly.
That's what we're seeing, the questioning of the picks and shovels trade, which had been so popular, not even just that, but of tech in general, of the heavy valuations. We had said that valuations are high. Once they come off, it will be painful. Is this the thing? Mark Andreessen calling it the Sputnik moment for AI. Someone else saying that this is Silicon Valley Bank for AI. It is finally, as you put it, a gray swan that's going to be forcing a sell-off.
The question is, does it metastasize into something much more aggressive on a competitive threat to the landscape of US? That moat, everybody talks about the moat around NVIDIA. That has had a fissure. The question is whether that fissure turns into the moment of a dike that actually blows apart. You just think of, I love what one of the notes came through, said, this is the Texas Hold'em moment for US tech. In other words, throwing everything at the wall, from Stargate announcement to Meta, doubling its AI expenditure last week. Well, if you suddenly got a competitor that can produce at much less cost, and it's open source, and this is what you and I talked about this morning. So there's a whole host of issues that can build the story for DeepSeek.
Well, this is the thing. I think today is just kind of sell everything, sell all tech as you try to understand this. But as we try to understand this, are things going to merge that say maybe this isn't bad news for Meta? Maybe this isn't bad news for these companies that have been plowing so much money into capital expenditures? This is cheaper. This is more efficient. Hey, maybe this changes from, again, not picks and shovel anymore, but to the commodification of AI, that other companies now have access to AI. And if you can figure out how to implement it and use it cheaply because of DeepSeek, maybe it's a boon to your bottom line.
Okay, well, let's talk about it a little bit more. It is the top story. It is the Chinese AI startup. If you want to go off and Google it now, if you don't know about them, DeepSeek is the name. It's rocking global technology markets, raising questions over that American dominance, the moat. The buzz grew over the weekend that the company's latest AI model poses a threat to the US industry, as we've been saying, to NVIDIA. Tom McKenzie is tracking this story. So, Tom, I put it out there that this is a gray swan moment. This story has been bubbling. Just put in context, what is DeepSeek offering to the world? Let's just put a framework around it.
I mean, look, I think the grey swan is a really nice framing of this, and you have both touched on some key points around this story. This is a company, it's a model, it's a research lab set up in the early 2020s by a hedge fund guy, done very well. He's built AI into his hedge fund for a long time down in Hangzhou, and then he used some of that funding to build out a lab, a research lab. And they dropped this latest model on the 20th of January. And to your point, it's about cost and it's about efficiency and about capabilities. And they claim that they spent just about $6 million, and they did it in 2 months. 2 months, $6 million. And that, of course, compares to the $80 billion number that we're hearing from in terms of Microsoft, in terms of how they plan to spend around CapEx to build on some of their models around AI. So it's the cost, it's the efficiency, and it's the capabilities. And on many metrics, DeepSeek is meeting, if not surpassing, the metrics of OpenAI, Anthropic, and Meta's Llama models as well. Does the innovation around AI stop here? No, it could well be accelerated, to Danny's point, but it does raise serious questions about the supply chain supporting that AI innovation.
Well, it certainly is this idea, Tom, that you're working under constraints, and something about that is the mother of all invention, that you do this with much less money. Tom, there's reporting from the information over the weekend that Meta has set up at least 4 war rooms to try to analyze what is going on. What are the consequences? You could kind of understand for NVIDIA that maybe this is bad, not as many people need their most expensive chips, but what about for tech as a whole? What about the Mag 7?
Well, we already know that Silicon Valley and many builders, app developers, and product developers out there are using and have been using DeepSeek's models. It is being dispersed through the ecosystem in Silicon Valley and more broadly as well. So you could get apps and systems and services produced more quickly, more efficiently, and that could be beneficiary, of course, a benefit to those who are buying them and producing them. but it does pose a key question around whether or not that demand, and this comes back to the valuation story for NVIDIA, trading at 33 times, whether or not that demand for the high-end GPUs, the Blackwells, is going to be there if you can build models with these kind of capabilities on more quote-unquote legacy chips. As you say, China has been forced with its back to the wall and has had to innovate. They've brought on these systems engineers at DeepSeek, and they have managed to build out a system, it seems, if you trust the data and what is out there on the open source building blocks of this model, that they have managed to do that with chips that are far less sophisticated than the AI-accelerated GPUs that NVIDIA sells.
It's just a great example of when your back is against the wall, you really do, you know, the mother of all invention is oppression. What are the geopolitical issues here? We've seen the eruption over TikTok, but the difference, as Danny and I were chatting about this morning when we came in, this is open source. This is a structurally different product for the world relative to perhaps the national security interests around TikTok.
Yeah, what does it mean around the spend for the lithography machines that ASML makes? And that's what's being questioned in the markets right now. What does it mean for the supply of GPUs from NVIDIA? What does it mean about the energy spend as well with those companies like Microsoft who are spending on nuclear power going forward years and have made those commitments already? Those are the question marks. And then on the geopolitics, we saw how the Biden administration responded when Bloomberg discovered through its own reporting that Huawei had developed a very sophisticated chip using SMIC and equipment in mainland China. They responded with further restrictions. Does the Trump administration to look to that as the playbook? Are we looking at further restrictions to try and clamp off even more of this technology? How far and how broad does the Trump administration go in response to this?
Tom, I think your first point is such a good one. Everyone's been clamoring on about how the trades du jour are picks and shovels, infrastructure, data centers. Does all of that now get questioned? Tom McKenzie, excellent reporting. Thank you so much for joining us. We'll catch up with you later on the show as well. Tom McKenzie there of Bloomberg. Okay, let's get you now some other top stories that are trending on the terminal this morning. China's economic activity surprisingly faltered at the start of the year. Factory activity shrank in January. Chinese industrial firms also reported the third straight quarter of declining profits that underscored the risk that the world's #2 economy might be stalling again.
Bitcoin dipping below $100,000 on Friday. President Trump ordered the creation of a working group to advise the White House on crypto policy. A long-awaited executive action, the order stopped short of confirming that the U.S. would establish a Bitcoin reserve, something Trump had vowed to do on the campaign trail.
And Elon Musk's Department of Government Efficiency is now officially online. A government job site to recruit full-time software engineers and other tech staffers is up. Applicants must be U.S. citizens, and apart from a resume and a commitment to working in the office, they're asked to list up to 3 items that, quote, show exceptional ability.
Coming up in the show, Ella Hodja of Newton Investment Management on why we may not find the U.S. is in as strong a position as it was last year.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manish Cranny in New York as tech gets a big shake from over the weekend. People analyzing the new open source model coming from a Chinese hedge fund, DeepSeek. Let's take a look at tech this morning, Manish. NVIDIA is selling off quite dramatically, some 10% it's down. This also calls into question all of the other tech players, too. The information reporting that Meta has set up 4 war rooms to dissect the model and what insights it can apply to AI. Is this the moat being questioned? Is this the amount of tech capex being questioned? Is it essentially all the popular bets we've had of the 2 past years being questioned?
Well, it's going to be a heck of a week because you've got multiple, mega tech reporting this week. This is a question then around the capex, Danny. If DeepSeek can deliver on the AI front a robust and faster ChatGPT model, for example, that's out there at the moment at a cheaper price, what's it going to do to the capex? You got $224 billion spent last year. You're looking at something like, what, $280 billion this year. Meta just upped their capex by 50%. So this, again, challenges all the precedents that we have in capex, energy capacity for this space.
And again, they spent $6 million building this model. I mean, they could have spent more hiring engineers and scientists for all we know, but $6 million versus the many, many billions that you had to have poured in to build things like ChatGPT. Bonds also, as we saw, they are rallying this morning. It's that kind of textbook risk off where you're finally buying bonds again. Yields down by nearly 9 basis points for your 10-year yield. Ella Hoja writing this morning, bonds offer value, especially versus equities, but could be under further pressure here. We do not have the all clear yet to own max duration. Joining us now is Ella. She is the head of fixed income of Newton Investment Management. Ella, do bonds finally work again? Just evidenced by what's happening today with all of risk selling off and people buying bonds. Are we back to some semblance of normal?
Well, I think for the prior 2 Januaries, we did say, I think in financial markets, I guess the mantra was bonds are back, and you haven't heard that this year, I guess. So probably you should start thinking maybe they are back indeed. But look, I think in terms of value, when you look at yields, and certainly when we're getting close to this 5% levels, there's some value to be had. Having said that, as you said in my quote earlier, there are still some risks to clear, and I would say they're probably more on the fiscal side. We need to hear more from the new administration in the U.S. in terms of what's coming fiscally, particularly on the tax side and on the spending side, right? And that's probably the biggest risk that bond markets are concerned about, as well as tariffs, of course.
Anna, good morning to you. We're describing this tech event as being the first sort of major gray swan, which the markets are trying to grapple with. If I was to say to you, the bigger gray swan for the bond market is the deportation prospect, taking us back to a 2020 level. 3 million people would be taken out of this economy. It's a supply side risk rather than the tariff risk, which is the bigger gray swan.
It's possible, yes. That's why I say fiscal is probably most imperative for bonds. I think markets will obviously pay attention to the Fed, but that's less of a risk right now because we've repriced. But when it comes to this balance between inflation, certainly, and potentially bigger spending, that's why I say the risk is not all clear for bonds here. Of course, what's happened over the course of the last week with tech matters because there's a high level of concentration in equity markets on certain stocks, as we know, unprecedented in nature. So that could pose some market-driven risk, and that would support bonds for now. But as far as policy goes, to have a bit more conviction over the next 2 quarters, I think you need to clear a little bit more on the policy side. We need some more clarity.
But Ella, this is the thing. It has been information overload over the past week. I mean, forget this week where you have this tech news, you have tech earnings, you have an ECB and a Fed decision. Last week, just on the fiscal policy side, on its own, it was a fire hose coming from Donald Trump of basically touching every single asset class from oil to where he thinks interest rates should be. How do you pick and choose what's important, what's noise, and what's actually tradable information when you just have such a vast quantity of things flying at you?
Absolutely. I think this is where the value framework comes in, right? So that's, when you say there's value in rates, for example, there's value in certain currency pairs. I think this is the important crux, and diversifying some of your bets. You can't place all the bets, for example, as the market had coming into this year, that everything's going to be tickety-boo and growth will fly and everything else, all other equities and bond markets are dire. So I think you need to have a bit of a contrarian mindset. That's probably the first tip that comes to mind. And second, have a deep value framework, because that will allow you to not get into trouble, at least not into the major trouble spots. And so that's kind of how we're approaching it. On your last point, how do you simplify it? Just go back to the basics, the 80-20 rule. Like, so if you just take what's happened with tech news, right? In that vector, what's the thing that matters the most is that we were priced for perfection. So we didn't know where the news was going to come from. It happens to come from DeepSeek. Obviously has implications for risk and for assets. And so take the simplest explanation to that. It's high level of concentration. So will some people be forced to sell? Yes. So take that explanation as your basis, I guess.
Well, okay, we're having this sort of massive reevaluation in equity markets, the biggest drop since 2022 on the NASDAQ. This, to me, presents, you're going to hear the moment, buy the dip in these equity markets. But what does it mean for the broader credit bond situation? Because the growth story here in the United States of America is still very, very strong. So on these disruptive moments, what are the opportunities?
Well, we would probably say that credit spreads remain very tight. I don't think that's revolutionary. I think the market knows that. It's entered this year with that view. So nothing new there. But I guess credit is the glue that holds equities together. So certainly worth watching. If credit spreads start to widen on these concerns, I'm not predicting that. We're certainly not betting in any major way to that effect. But I think there is a risk here of some correlation to that effect. Then clearly it can feed through into equity markets. But the biggest risk has been from rates pricing higher. And that's one of the ways we saw potentially rates markets feed into broad equity weakness. But it seems like we might get the reverse for now. It might be equities that feed into credit and certainly give some support to core bonds. You have to be open to that scenario right now.
Okay, Ella, thank you very much. Ella Hodja there of Newton Investment Management on Bloomberg this Monday morning, setting the agenda. Context Matters from New York.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
It is a rupture in global tech that we're monitoring this morning. Is it a Silicon Valley Bank moment, whereas in one area the market experiences pain, everywhere else feels it too? Let's check out the yen this morning, strengthening versus the dollar by more than 1.25%, Manus. It's again that connection between carry and tech we're seeing play out.
Yeah, the question is, how much more does it explode? It's nothing like the volatility moment that we had last August when the carry trade was taken out, but it certainly is going to add to that momentum in strengthening yen overall.
Let's look at some of the other front page news that we are tracking this morning away from tech. First off on the Wall Street Journal, leading with activist investor Ancora Holding. They're preparing to wage a proxy battle at U.S. Steel. They intend to rally shareholders around a plan to oust the CEO and not salvage the Nippon merger. The firm isn't interested in pursuing a sale of U.S. Steel to another party. Next up, New York Times leads with the Philadelphia Eagles and the Kansas City Chiefs are heading to the Super Bowl. Why do I get the sport? Why do I get the sports stories? Go to the Super Bowl. It was a big weekend over the weekend for sport. It is the third consecutive Super Bowl for the Chiefs, and it'll be the second time that the two have faced each other in the big game in a rematch of Super Bowl. But you already knew all that.
I knew all that. All I know is Kelsey's going out with Taylor Swift, and that's really all we got to know about buying the merch.
That's all you need to know.
That's really all you need to know. That's just downgraded football aggressively.
That's okay. They're not watching yet this morning. Yeah. Okay, they're still out celebrating. And on the Bloomberg, President Trump announcing sweeping tariffs on Colombia before abruptly pulling the threat after reaching a deal on the return of deported migrants. The White House claimed victory late on Sunday, saying Colombia had agreed to all of President Trump's terms without delay. For more on this story, we are joined by EMEA News Director Roz Matheson. Roz, it was a blink and you miss it moment on tariffs. Is this the new blueprint for tariffs in the Trump administration?
Well, certainly it tells us a couple of things. For starters, it tells us that Trump indeed will use tariffs as a political tool for leverage with other countries, not an economic-only tool, but very much for political purposes. And he did this very quickly in response to Colombia saying we're not going to let these military planes carrying deportees land in our country. In a flash, Trump said, fine, I'll put tariffs on you. And that we can see that he's going to be very reactive then on the tariffs front. But equally, the third part of this is that he's willing to negotiate. And as quickly as he was going to put them on, he said, fine, I'll take them off again. He is leaving some restrictions on Colombia. Obviously, he wants to see how this plays out. But he is willing to use tariffs very quickly to play hardball and then see what he can get in response. So very much tariffs are going to be that game of leverage, whether it be Colombia or be it with bigger economies, again, like China, Canada, and obviously countries in Europe.
I think it depends on the size of the trade that you have with the country, and that allows you to immediately capitulate and turn around. The raids have started, the very poignant raids on immigration in Chicago. Tell us a little bit more about the momentum there.
Well, obviously, we saw these kind of the first official raids under the Trump administration. And it's not as though these raids weren't already happening. The difference is they were done across very much a multi-agency approach this time and very publicly, televised in a way. So very much the Trump administration wanting to demonstrate that it's doing something, sweeping up these people in quite dramatic circumstances. And again, the question is, where does this begin and where is this going to end? You can see cities like Chicago, some states saying, hang on, we're going to try and put up as many defensive measures against this as possible. We're not going to work very directly with ICE, as the immigration agency is known on this. We're not going to cooperate. You want to do this, you're on your own. So it's going to be very tense going forward.
Roz, thank you very much. Roz Matheson there on the latest political moves over the weekend. Amy Wu-Silverman joins us from RBC Capital Markets. We'll discuss volatility as NVIDIA is down over 10.5%. Are you ready for this volatility in equity markets?
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger and Manish Krani here. Let's set your agenda.
A global risk sell-off. NASDAQ futures fall more than 3%. Bonds rally. The 2025 optimism for markets is challenged from tariffs and tech. That U.S. tech exceptionalism threatened by the Chinese AI startup DeepSeek with a cost-effective solution for AI. A compromise agreed in the standoff between President Trump and Colombia on the threat of sweeping tariffs. Danny, good morning. This is what you call a volatility shock in the making.
It's a margin call kind of day, and this might be what's causing it. NVIDIA down more or nearly 11.33%. Is this the moment? Everyone had said that tech was overvalued. It was looking bubbly, but without anything to disrupt it, what would pop it? Is this the event of the U.S. moat around chips and tech being questioned? Is the picks and shovel trade now dead? Is the data center trade now dead? You see across markets, NASDAQ futures now off almost 4%. We've had roughly 200,000 NASDAQ 100 futures contracts change hands by before 5 a.m. That is 4 times more than the 30-day average for this time of day. By the way, if NVIDIA ends the day down more than 8%, it will be the biggest erasure in market cap in history of any individual stock. S&P futures down 2.33%, and maybe the havens are acting as they should. Bonds are rallying this morning. They are up a decent chunk of basis points, nearly 10 when it comes to the U.S. 10-year yield. Other assets like the yen also rallying this morning. So, man, as this goes beyond tech at this moment, it is having worldwide and global market repercussions.
And I think where you are, this is the kind of VAR shock that nobody was pricing for. We were pricing for a Goldilocks scenario. So what you have are margin calls, then you have a self-fulfilling prophecy, which is you've got to sell perhaps your most treasured assets to meet your margin calls. And I think, Danny, as you said earlier, you think about this company, DeepSeek, they spent, what, $6 million relative to OpenAI. They spent $5 billion. Now, the question is, what is the product and can it really stack up on every front, on power, on capacity, and in terms of a real challenge to OpenAI and to Microsoft and to NVIDIA?
Citrini Research puts this really well, that this necessarily has to question all of the companies that got their profit from the immense amount of CapEx that was being spent on AI. But on the other hand, I think might be more interesting, once the dust settles of this crazy sell-off, what benefits from this? Again, they call this the commodification of AI. All of a sudden, it becomes much easier and much cheaper for basically every company to start to implement AI, and maybe the winners will be people who can do that in really interesting and productive ways.
I think Jordan Rochester summed it up beautifully for me. And this week is a huge reporting week, and some of the biggest companies are going to have to go on calls. This was a Texas Hold'em moment for the chip industry. They are, you just think Stargate announcing $500 billion, Meta upping their capex last week. The calls that they were going to have this week are, what are you going to do, and how are you going to beat and stand up to DeepSeek?
And they usually unleash their 2025 guidance in these earning calls. I mean, is all of that upended?
Indeed. Let's get a little bit more on the story. We've got Tom McKenzie standing by to answer some of these questions. Tom, good morning. Good to see you. I've called it a grey swan moment for global markets and for technology. Create the framework. What is DeepSeek? What do they do? And what are they going to offer that's so much more competitive relative to the US technology sector?
Yeah, wouldn't you love to hear from Jensen Huang at this point, or indeed the CEO of DeepSeek? Look, he's a former hedge fund boss. He still oversees a hedge fund in Guangzhou in the innovative capital of China, and in 2023 started this research lab. They launched January the 20th. That's when the new model came through, the R1 from DeepSeek, and it was picked up by experts and by tech bros and others in Silicon Valley. They started to build on it. They started to stress test it. You heard from Andreessen Horowitz saying this is a potential Sputnik moment. He released that comment on the 26th. So already Silicon Valley, their heads were being turned by this. It was trained in about 2 months, that's the claim. Cost about $6 million to train it. That compares, as you say, to OpenAI's spend on training their models, but also Meta spent about $60 to $70 million training their most recent model. So that compares 6 million to 60 to 70 million. The capabilities of the model, they match, apparently, on many metrics, match those capabilities of OpenAI, Anthropic, and Meta. It's the capabilities, it's the efficiency, and it's the pricing. To your point, Danny, around pricing, the costs are about on some metrics, about 5% of the pricing that OpenAI charges. And that's already led in the domestic Chinese market to price cutting, price wars from the model makers. Tencent, Alibaba, Baidu, they've all had to cut prices already on the back of the models that come through from DeepSeek. So if you're building the AI products, you're going to be under pressure. If you're buying them, maybe it's good news.
I was going to ask you exactly about that, Tom, because to Manas's point, we're going to have Meta, Microsoft, Apple, and Tesla, for what it's worth, reporting this week, where they're all going to be asked to outlay their 2025 outlooks. What does it mean for these players who've been spending so much on CapEx? We know from the information that Meta has already developed 4 different war rooms where people just have their heads down analyzing what this could mean for their Llama model. Is it a good thing or a bad thing for them?
Well, you would have thought it's a challenge for the likes of Meta, maybe longer term in terms of the cost of incorporating AI into their own business around advertising. That will prove a benefit. For the near term, it does raise a huge question over that commitment to spend $65 billion this year from Meta, $80 billion from Microsoft. Can they get the systems engineers that DeepSeek have to create the kind of efficiencies? Look, JP Morgan have raised the question, did DeepSeek lean on the 50,000 or so Hopper GPUs that the hedge fund that the boss, the owner of DeepSeek, also has? That remains a question mark. Some of the data is being scrutinized as well. But if we take this at face value, then it certainly raises a pivotal question around the need to spend on the most sophisticated, most expensive GPUs, the likes of the Blackwell from NVIDIA, and what it means for those CapEx projects. Also the energy commitment as well. And we know that these companies are partnering with energy providers and spending a huge amount on that as well to ensure that they have the energy flow into the data centers. But if you can create models that are this capable as their US competitors, but a fraction of the price and a fraction of the energy use and a fraction of the GPU use, then that raises major questions before we even get onto the geopolitics of this.
Tom, thank you very much. Tom McKenzie there, closing off with the geopolitics, critically important. Let's talk about volatility. This is the performance in the VIX over the past year. Let's see how it stretches out today. Amy Wu-Silverman is the head of derivatives strategy over at RBC. Amy, I'm looking at the chart. This is the carry trade was the last most exuberant moment in volatility and the December Fed meeting. When you walk in this morning, you thought you were going to have a paddling duck kind of market for the year. Here we are. Goldilocks is challenged. You're talking to clients. What are you saying to them about volatility and how to take advantage of this moment or how to protect yourself? Where do you come down on the scales of risk?
Good morning. Well, it's possible this paddling duck might have just paddled over a waterfall we're about to see. I think we're a little early. I think there's going to be a lot of digestion today, but there's no question that this could be a potential game changer. Because one thing we've talked about this entire time is, you know, even as investors are wishing for breadth widening trades this year, tech has to be okay simply because it's such a large weight in the market. And if tech is not okay, the entire market goes. That's what we're seeing today. You know, I'd certainly expect a spike up in VIX, and I'd certainly expect a correlation across the board to rise. And obviously, correlation is a massive component into volatility across all asset classes.
Amy, so many people had kind of called for a moment like this. Not exactly. I think Manus has been spot on when he's called this a gray swan. But all of those calls out there saying tech looks bubbly, valuations are too high. And the retort to that would be, well, American tech has a moat around it. And you can continue to navigate and get those higher valuations because of that very fact. Amy, if that's being called into question, is this the moment that whether or not we're in a bubble can, again, be questioned, but something is popping here, and we could see a really ugly sell-off continue for multiple days?
Yeah, totally. And I'd say, you know, for a lot of folks, if you actually look back in time, I feel a little empathy. I kind of get where they're coming from, because if you look at other market drawdowns, the flight to safety has actually been to tech. If there was a growth scare, right? If you see a change in the rate story, it's actually mega cap tech that folks have actually flocked to in the past. So it's a really interesting shift in narrative. And I do think, Danny, that, you know, it takes some sort of exogenous shock to potentially change that narrative. And then, you know, look, if you have that, if it's a massive weight in the market, and that sells off, there's no breadth widening trade at that point that can save you, because correlations across the board have just picked up.
Is this an exogenous shock or just a reality check, Amy? It's early days, I know.
Yeah, for sure. You know, look, I think a lot of people, when they talk about the richness and valuation, they certainly didn't expect the differential numbers that your colleague brought up, you know, 5 billion versus 6 million in terms of spend, and then obviously the lead-on effects to all the other sectors. And what's interesting is, even coming into 2025, we actually had seen a pickup in skew, so meaning we did see a pickup in demand for hedging. You know, my take on that had been that it wasn't particularly ominous. It was actually just a function of folks being long. But, you know, a little bit of the danger here is the fact that people are more fully positioned than they were a few years ago, where all we could talk about with people buying the right tail, people buying mega cap tech because they had to participate. You know, everyone has jumped in the pool. So that change in positioning, Manus, is also going to make things a little bit more painful on the other side.
Right, and there's just these buildup of products around it too. I mean, there are multiple leveraged NVIDIA ETFs you can buy if you want to get 2 times the upside in this morning, 2 times the downside. Amy, what does that buildup mean in terms of margin calls, in terms of wider VAR shock? Do we seem to be anywhere close to that sort of snowball type event?
Yeah, I have to be honest, when I read news like this, that's actually the first place my mind goes to, because, you know, when you're a derivative strategist, you think about that exacerbation. And I'll just give you a few dates, right? When you look at August 5th of last year, when you saw that volatility spike, you know, what happened there was related to the yen carry unwind. When you look back to February 2018, when you look at Volmageddon, what happened there? Yes, it was spurred by rate and growth worries, but what actually happened was there's too much massive notional in short levered ETF products, and that causes not only an unwind, but that unwind to be very explosive. Now, I'll say a couple things related to that. Obviously, you have to watch these inverse products, but the notional size of a lot of the short VIX products is a lot lower now than they were a few years ago. So you do have that going for you in terms of what we could see in the follow-on for the days to come.
When you see moments like this, Amy, I'm looking at dollar yen. I mean, this is the consensus trades, as Tim Graff, I'm chatting to him on the IB. This is the consensus trades being taken to the woodshed. When you see rally in dollar and a rally in yen and a rally in bonds, that signals to me that we're at some kind of a different moment in the reaction function by markets. This is more than a soupçon of fear.
Yeah, I would agree with that. And you know, this is one of those things, Manus, where that, like, I just have to say time and time again, you can't count on traditional correlations to stay the same. You know, bond equity correlation, I'd say being the #1 worst offender, right? Like so many models were built off the fact that we were expecting this inverse correlation. And then you get areas like COVID when it just doesn't work anymore and everything becomes positively correlated. I think the same thing has happened within the market between mega cap tech and the rest of the market as it relates to correlation. And if we get that correlation all going in one direction again, you better expect just formulaically that volatility is going to pick up. You know, you're going to see that threshold rise, and it's going to rise not only in equity volatility, but across cross-asset volatility too.
So Amy, just to put a finer point on this, is this the kind of dip then that you do not want to be buying, at least for now?
I would say, look, it's a difficult question because it's early and I'm by no means an expert within AI specifically. You know, this is something where today I'm going to go back to the folks who actually cover these stocks, who actually, you know, look at Microsoft and Meta, et cetera, and the semiconductors and say, you know, how big a deal is this? Because certainly from a hedging perspective, it's something people want to do anyway. So perhaps it's not necessarily buy the dip because remember, everyone's quite long, but perhaps it's we still hedge even though it's very expensive.
Well, we're going to hear from them themselves this week. We're going to get Meta, Microsoft, Apple, and Tesla all reporting. And by the way, a Fed and an ECB decision. If you were concerned, we'd have a quiet rest of the week. Amy, thank you so much for joining us. Pray for that poor little ducky off the waterfall. Amy Wu Silverman of RBC Capital Markets. Let's get you some other stories now that are trending on the terminal this morning. China's economic activity surprisingly faltered at the start of the year. Factory activity shrank in January. Chinese industrial firms also reported the third straight year of declining profits. That underscores the risk of the world's #2 economy that it might be stalling yet again.
Bitcoin dipping below $100,000 as we have this risk-off narrative across global markets, despite President Trump ordering the creation of a working group to advise the White House on crypto policy, a long-awaited executive action. The order stopped short of confirming that the U.S. would establish that Bitcoin reserve, something that Trump had vowed to do on the campaign trail.
And Elon Musk's Department of Government Efficiency is officially online. A government job site to recruit full-time software engineers and other tech staffers is up. Applicants must be U.S. citizens, and apart from a resume and a commitment to working in the office, they're also asked to list up to 3 items that show, quote, exceptional ability.
Off to rewrite the CV.
You going to apply, man?
I'm not an American citizen.
Oh, of course.
I'm discounted.
So sad.
On the outside. Coming up, President Trump whiplashed markets by first announcing sweeping tariffs on Colombia before suddenly reversing them. We'll discuss the context in just a moment.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's your brief on a day that looks a whole heck of a lot like a margin call day. Let's get straight into what tech is doing, selling off across the board. NVIDIA plunging more than 12%, Microsoft down 6 1/3%, Meta down 5%. Manis, you've mentioned this. Meta has earnings on Wednesday. Is this the moment that Mark Zuckerberg is going to have to ditch the t-shirt and gold chain for a suit to try to explain what their 2025 outlook is now going to look like?
Well, listen, everybody was cheering on Friday when it was announced that they're upping their capex to 60 to 65 billion. I think one of the best lines is, and this is about the threat from DeepSeek. They spent $6 million. OpenAI spent billions, $5-6 billion. So what are you able to produce, and how competitive is that? And what is the real scale of threat? Because it is open source. It's 100% open source. So everybody that's talking about geopolitics maybe just needs to recalibrate their thinking around that.
It underscores this idea that picks and shovels, aka NVIDIA, is not AI. It is just the picks and shovels, and maybe we go into a pure AI trade. And Manis, this morning having global ramifications across assets too.
They are indeed. Ground zero for where the money's flowing. It's flowing into bonds, but also dollar yen. Have a look at this. This is not as explosive a volatility moment as you had with the unwinding of the yen carry trades in August last year, but it can certainly grow a little bit more aggressively. Yen up by over 1.3%. As Amy Wee Silverman said, it's a paddling duck that's just gone over a waterfall.
Poor little ducky. Well, it is an information fire hose, both last week and this week, between tech, between central bank decisions, and what we're getting out of the White House, man. As President Trump announcing sweeping tariffs on Colombia due to a dispute over deported migrants, the U.S. and then Colombia reached a deal, and Trump called the tariffs off. You blinked and you miss it. For more, we're joined by Bloomberg Government Congress reporter Jonathan Tamari. Jonathan, great to speak with you this morning. It was a fast-paced deal being reached. Is this the new blueprint for tariffs in the Trump administration?
It is, and it just shows the president, is feeling that he has a mandate and he has the power to influence things, not just in the United States, but with around the region here. And he's willing to both throw the U.S. economic weight around in order to get what he wants. And you're combining two of his, biggest priorities, both immigration and tariffs, are two things he talks about more than anything else. And so I think we should expect a lot more of this kind of muscular approach and probably a lot more whiplash in the early days of his administration.
Perhaps the most poignant images are of the national emergency. National emergency at the border, we know that. National emergency is the reason why these deportations and raids are taking place in Chicago. Multiple agencies involved. We think nearly 1,000 arrests is the reporting on Sunday. Just give us a sense of the scale. We're looking at the images, obviously, of those people being boarded onto military aircraft, and this is the point of angst with Brazil and Colombia.
Yeah, the scale is unusual. I mean, obviously these raids have taken place, but the multiple agencies being involved, the media being brought along for the ride, the incoming director of Homeland Security joining some of these raids. It's all, again, a show of force and a kind of a major symbol of Trump saying that he's delivering on what he wants and probably trying to stoke fear among undocumented immigrants that they might be getting a knock on their door. He really has always said that tough enforcement will discourage people and maybe even encourage people to leave. He's trying to follow through on that here.
Finally, the other information fire hose piece we'll be getting this week are more congressional confirmations. Jonathan, who's on the docket and what confirmations might be particularly difficult for this administration?
Yeah, we saw them get one of their top, most controversial nominations through Friday night, Pete Hegseth for Department of Defense. This week, we have hearings for Robert F. Kennedy for Health Secretary, Tulsi Gabbard for Director of National Intelligence, Kash Patel for FBI Director. These are three of the most controversial nominees Trump has made. Their hearings are going to be really closely watched. Republicans felt after Hegseth navigated his hearing that he would be okay. He was in the end, just barely. So these three events, they want to see these three nominees, handle the questions that they're going to get, and those hearings could go a long way to determining whether they all get through or whether one or two of them end up being blocked.
Jonathan, thank you very much. Our Bloomberg government reporter there, Jonathan Tomari, on the very latest. It's a busy week for you. We just want to show you what's going on with U.S. equities. We are at session lows now. New York is coming in and beginning to really punch the docket here. The NASDAQ futures are down almost 5%, Danny.
Yeah, it's really painful. NVIDIA continues to sell off, too. Let us not forget, we have tech earnings coming up this week, and we will bring you that coming up shortly on your brief.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Welcome back to your brief. If you were hoping for a quiet start to your week, you are sorely mistaken, and it is a busy week coming up. A marathon of tech earnings begin Wednesday. We're going to have Microsoft, Meta, and Tesla, plus the Fed's first rate decision of the year also on Wednesday. Then it's the ECB's turn for a rate decision on Thursday. We're going to get PCE data in the U.S. on Friday. And Manus, before all of that, NASDAQ futures now falling 5%.
Yeah, we're halfway on the way to those exuberant corrections that Julian Emanuel talked about. One story, DeepSeek, what AI can they deliver, and what are the chips that they're going to use? And that's why you're seeing NVIDIA down 13%. If we continue in this trajectory, this is going to be the worst close in the history of markets. Broadcom down 12.44%. Again, the contagion right the way across here, Danny. Likewise on Meta, they upped their game in terms of the actual capex they were going to deliver. That was announced on Friday. So this is a VAR shock. This is about a real margin call shock to the markets this morning?
Because it is a question of the picks and shovels and the data centers and the infrastructure spend behind them. Also looking at Siemens Energy in Germany, falling more than 20%. Their shares had more than quadrupled with the expectation that the AI boom would feed energy spend.
Well, this week it's going to be huge. You've got Apple, Microsoft, Meta, and Amazon all reporting. There you go. NASDAQ down 5% and change. If we continue on this trajectory, there's a lot to justify on those calls this week.
Well, that's it for us. Surveillance takes the reins from here.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Positive because it is definitely a change in tone.
There is a lot of optimism everywhere about what the U.S. could do.
There is reason for optimism. There are green shoots that people are able to point to.
The U.S. is at the epicenter of all discussions.
As America goes, so goes the world.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, coming into Monday with a huge shakeup in global tech. Check out equity futures down across the board. The pressure concentrated on the NASDAQ. Moments ago, the NASDAQ 100 was down by close to 5%, now negative by 4.7. NVIDIA down double digits plus. NVIDIA in the pre-market negative by 13%. Unlucky for them. DeepSeek A Chinese AI lab demonstrating they can do more with less and raising huge questions about the whole CapEx narrative and the beneficiaries of it.
The disruptors are becoming disrupted, and that is basically the theory and the fear with some of what DeepSeek promises, which is, as you say, to do more with less. They don't need the $100 million investment. They need a $5 million investment. They don't need the huge data centers and the same types of energy. They just need a little bit, and it makes it something accessible for a lot of different companies, if it is actually true. The key question is, though, how much does this demonstrate how lopsided this game has been in the market, with a couple of names really taking all of the momentum?
So as Lisa suggested, it's not just NVIDIA that's getting hammered, the big spenders, Microsoft and Meta down in the pre-market as well. The buzz around this over the weekend was absolutely massive. Do you remember the buzz around the utility players over the last 12 months as well? Check out Siemens Energy over in Europe. The biggest decliner on the DAX this morning. We're down by 20.6%. That one's getting absolutely nailed as well. I think we've got to ask a question as to whether this is really real, Lisa. So let's get into that. Mizuho this morning putting out a note and asking if it's a synthetic scare and raising questions about whether this was subsidized by the state in China. Those questions will be asked repeatedly throughout this morning.
It's an important question. It's an important point. Essentially, is there something behind the scenes that isn't as efficient, that isn't as using just so many fewer GPUs, so many fewer chips from NVIDIA? It raises a lot of questions at a time when potentially this is a fragile U.S. market that is really concentrated in a couple of big tech names. And if they could be disrupted, could that remove some of the U.S. exceptionalism story that potentially could hurt China?
If they have done this, they've done this with serious limitations to chip access.
Well, that's the whole, really, what's ironic about this. The U.S. was trying to avoid this. They had export controls on the most advanced chips, so China, DeepSeek, was able to develop this AI model without that. In an interview last year, this is what the founder said, quote, "The problem we are facing has never been funding, but the export control on advanced chips." And it seems they were able to get to this pretty incredible point, potentially without that access.
What a time for this shakeup to happen. Earnings season this week. Check out the calendar. Wednesday, Microsoft, Meta. We'll hear from Tesla as well. Thursday, Apple. Then next week, you're going to hear from a whole lot more, including the likes of Microsoft and Amazon.
What's fascinating to me here is the spend that a lot of these companies are making towards some of the investments in chips, et cetera, data centers. Will they be punished for those investments? We heard about Meta being some $50 to $60 billion of investments. Will that become a liability for them at a time? But there is a real question about whether those types of investments are needed.
Which is why this is such a painful moment. Jordan Rochester, in that note you were mentioning, Jonathan, talked about this is happening after we just saw what he calls a Texas Hold'em all-in push on chips that's coming not just from Meta and NVIDIA, but also this White House when it comes to Stargate, pushing millions and millions, billions of dollars towards AI and all-inclusive of what that means, data centers, chips, and the likes.
Futures negative then, down across the board. We're down by 2.5% on the S&P and down a whole lot more on the NASDAQ 100. Coming up this hour, we'll catch up with Steve Chevron of Federated on the latest sell-off in equities, Rob Casey of Signum as President Trump walks back tariff threats against Colombia, and Neela Richardson of ADP ahead of the Fed decision on Wednesday. We begin this hour with stocks falling as Chinese AI startup DeepSeek demonstrates it can do more with less, raising questions over the future of America's tech dominance. Steve Chevron of Federated joins us now for more. Steve, it's good to see you, sir.
Good morning.
What's your initial reaction to this? So it's obvious that for the chip players, if this is real, not great news for NVIDIA. For the energy providers, the likes of Siemens Energy, not great news for them either. What does it mean for the big spenders of the last 12 months, the Microsofts, the Metas?
Yeah, I'm not built well for panicking, so I know that there's a lot of excitement and panic this morning, and I'm sure it'll be an ugly day in the market. I think there's three key points here. The first one is it real, right? Is it real, or is there some spending that's not being accounted for? Let's take a breath and find out. If it is real, I'm not sure it's as universally bad as everybody wants to make it out to be. It certainly is for the chip makers. It certainly is for the kind of infrastructure build-out play here. But in terms of AI implementation, in terms of the AI build-out, if you're telling me that companies like Meta, Google, you pick the company, if they can implement effective AI without the CapEx, meaning that there's more cash flow that can be returned to shareholders or can be invested in other areas, that's not a bad thing. Now, it's not great from a geopolitical perspective, but from an efficiency perspective, what we may be at here is we've just crossed that Cisco moment where it's all about the modem, but now it becomes about building out the internet, using the internet, and creating new business models around that. And then I think the third point, and this is one that always bears repeating, that no one's wanted to hear the last couple of years. This is why you build a diversified portfolio. It's not great to have the entirety of your capital in 7 names, because things like this can happen. Disruption happens. And if you look today, yes, there's carnage across the market, but the value stocks look a heck of a lot better, and the small caps look a heck of a lot better, and you only need a roof when it's raining, John.
Right now, it's raining, so let's talk about that. Yeah. The decline that we're seeing in the likes of Microsoft and Meta. I know traditionally we don't do single names with you. Do you think there is an opportunity to get into those names now, or would you wait to see things settle down?
I think there will be. I mean, I think you're going to see a few days here of rethinking, right? You're going to have some algos hitting sell today. You're going to have people asking questions about what's the right valuation. It'd be very interesting to see what the earnings reports are going to be like this week. Can company management pivot to talking about, hey, this is real or it's not? And if it is real, you know, here's some savings we may be able to achieve on CapEx. That might be early to do that, you know, within the next week or so. And so I'm sure these names will be under some pressure. But again, I look out and I say, right, the story wasn't about, the AI story is not about who can spend the most money developing AI. That was never what it was about. It was about who can utilize AI and monetize it to make their company or their moat that much better, who could deliver that solution. And if this allows them to deliver that solution quicker or cheaper without the bottlenecks of energy or chips, so much the better over the long run.
Does it undermine the U.S. exceptionalism story?
No, I don't think the U.S. exceptionalism story was built just on ChatGPT. I mean, I think it's built on this idea that, A, we are the greatest innovator in the world. Yes, you may have found a cheaper way to do this, but...
In China.
In China, yeah. No, I mean, look, this is not a country that isn't, you know, competing hard. But when you look at the U.S., you have kind of a population growth advantage over the rest of the world. As bad as our demographics look compared to our past, we don't have the 10, 20, 30% working age population declines that you do have in China and Japan and Europe. And then also, okay, great, you took a technology, you made it more efficient, but, you know, let's not forget that the Magnificent Seven are magnificent for a reason. One of them owns social media, the other one owns smartphones, the other one, I mean, you can keep on going down the list. So yes, does this mean that there are other companies in other countries that will compete and challenge that dominance? Sure, but that world existed last Friday as well.
In the middle of last week, I was looking at the calendar ahead, and I was looking to what was coming up the pike today and this week. It was the Fed decision, it was core PCE, it was the earnings from some of these tech players, and then, of course, there's the overlay of all of the policies. And I'm thinking, wow, what a maelstrom of information. Yeah. Now none of it matters, right? It seems like basically the Fed and the government are basically off sides, and the technological advancement is in the front seat. How much is that the reality? Is that really what's going to suck all the oxygen out of the room at a time where there's a lot of noise elsewhere?
I think that's why you buy. I think that's why you buy if you see weakness here, because there's a lot of positives that are out there otherwise, right? Again, yes, there's going to be some disruption. Maybe the Mag 7 aren't as dominant as they have been. I don't know that that's a bad thing, right? I think if you see a market broaden out, if the beneficiaries of AI start to play out here, companies that can use and implement this technology to become more efficient, if that's cheaper, then that broadens out that opportunity set. But you've got a lot of positives going on, right? You've got inflation that's come down from 9 to 3. We think it's going to 2.5. You have a Fed that, despite what they say, they're going to cut a couple times this year. I think the data is going to push them there. You've got tax rates that are likely to become lower. And so this actually enhances a theme that we've been talking about a lot over the last couple of weeks, where if you look at what's a pretty constructive outlook for us for this year, and you try to figure out what are the downside risks and the upside risks, all the downside risks are shorter term. Right, it's concern that inflation won't come down, or the Fed in this kind of little stubborn period, or the sausage making over policy, or now, you know, this concern that we've got to work through. On the other side of it, though, is inflation that is coming down, and rates that are going to come down, and policy that is going to get made. And I think what you'll see is that, you know, maybe Cisco has had its moment. Maybe if NVIDIA is this generation's Cisco, but now there's opportunities potentially for a whole host of companies, if this is real, to implement AI much cheaper, much more effectively, and that's going to be the real value here.
If this is real, you mentioned geopolitical concerns. Do you expect more policies like export controls or tariffs because of this?
I think it's incredible, Anne-Marie, that, you know, we had the Colombia episode yesterday with the, you know, we're not letting you in, then we're going to tariff you, now we're letting you in thing. And we didn't even talk about that today. I mean, in any other week, that would have been like 90% of this discussion. I don't know. Look, I think that this president is certainly going to use tariffs as a negotiating tool. We saw that very well on display this weekend. And I think, generally speaking, there's bipartisan support to make sure that the United States remains the leader in emerging technologies. And I don't think that changes today. If any, remember this, when Sputnik was launched, it was a shocking moment to the United States. We still got to the moon first. And I think you may end up seeing the same thing happen.
So do you think that maybe this is a wake-up call, and then we can see even a bigger push from this administration when it comes to things like AI? I don't know how much bigger you get than Stargate.
Well, I think if it's real, it is, because it tells you that you just can't throw money at it. You've got to innovate. You've got to let the engineers lead, as opposed to just think that, you know, it's a story about throwing money. So we'll see. Again, it may not be real, but if it is, you know, maybe you've got to think more holistically about how you support those companies and not just throw chips. And by the way, here's another interesting tidbit here. You know, does this make Taiwan less important? And does that lower geopolitical tensions? Because if you can advance in AI without invading Taiwan, well, that's a lot cheaper, isn't it?
Right now, we're standing first and asking questions later. Steve, it's good to see you, sir. Thank you. Steve Chevron there of Federated Hermes. Futures down across the board here on the NASDAQ 100, down by more than 4%. Bramo, looking at NVIDIA in the pre-market, down by close to 12.
I love what Steve said about the Cisco moment. We've been talking about this for a long time, and Michael Wilson over at Morgan Stanley talking about how there's going to be a shift from the infrastructure, the chips, to the application. Is this that moment, regardless of the truth, the veracity of exactly what's happening here?
Certainly feels like a big moment. Let's get you an update on stories elsewhere this morning. With your Bloomberg brief is Danny Berger. Hey, Danny.
Hey, John, just to emphasize the hype, DeepSeek, that Chinese AI startup you've been talking about, is now top of the iPhone download charts. Buzz grew over the weekend about their latest model being cost-effective, as you've been talking about, while running on less advanced chips. NASDAQ futures, just another check on those, tumbling down 4 1/3%. Elsewhere in this market, Ryanair shares are rising 3.5% in the London trade. The European low-cost carrier posted stronger than expected third-quarter earnings driven by holiday bookings. It also cut its passenger growth target for the second time in 3 months due to Boeing's delivery delays. But Ryanair said the constrained market for aircrafts will also help them command higher prices. Now let's get the latest on the wildfires in Los Angeles. The region is getting its first rainfall in months, but that's posing a new risk of landslides. Right now, a flood watch is in effect for Los Angeles County, and several roads are closed due to mud flows. The Palisades fire, that's more than 23,000 acres, is now 90% contained, while the Eaton fire that destroyed much of Altadena is 98% under control. And that's your brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, the tariff threat in action.
To me, the most beautiful word in the dictionary is tariff. And it's my favorite word.
The tariff system made so much money. It was when we were the richest.
That conversation just around the corner, live from New York City this morning. Good morning.
Influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Stocks down and down hard. We are negative by 2.4% on the S&P 500, down by more than 4 on the Nasdaq 100. In the bond market, it receives a bid. Yields are lower. We're down by 12 basis points. The 10-year now back to 450. The single name price action is pretty crazy out there this morning. Nvidia's down by more than 10%. Losses for the likes of Microsoft and Meta. I mentioned some of the utility names. Utilities were up by close to 20% on the S&P last year. Just bear that in mind when you look at the likes of Siemens Energy over in Europe, down by something like 20%.
This challenges the entire theory that a lot of people have been talking about with artificial intelligence, where you would need that much more energy and that essentially you need to keep buying chips until the cows come home, and essentially you don't need to buy that many chips, according to this new rubric, and you don't need that much energy. This raises a question about whether chip exports have just made China truly more innovative to do more with less, and that is really what people are grappling with this morning.
Rob Casey of Signum Global Advisors alongside us. So, Rob, I'm going to bring you into the conversation a little bit earlier than I typically would. And we're not going to start on tariffs. We're going to start on this. How spooked do you think Washington, D.C. will be, given what maybe is coming out of China in the past week?
Well, I think pretty spooked, right? I mean, the concern has always been that as we send chips over to China, they will outcompete us. The Biden administration has put on a lot of different chip export restrictions, right? We saw that towards the last week, the last couple of days of Biden's administration. The Trump administration hasn't pulled any of that off. I expect they'll keep it on. They may add to it.
They may add to it. It's been a week already. Trump's in office. Do you think Biden was too slow? Or did this last administration drag their feet when it came to combating China?
Well, I mean, honestly, the truth of the matter is, if we're looking at D.C. to be really quick when it comes to tech, right, when it comes to innovation, if it comes to AI, chips, I mean, frankly, social media, if we're looking for them to be really fast, I'm not sure that they've ever really followed through on that promise, right? The issue, the bug, or maybe the benefit of democracy is it just moves really, really slowly.
The fact that we have this now, and we know that Trump likes to use tariffs as a threat, potentially, he said we could get tariffs as soon as February 1st. That's this weekend. Does a story like this make that situation more likely?
Well, we'll have to see how Donald Trump responds to the news around DeepSeek, et cetera. Do I think that it makes tariffs more likely on China? Perhaps at the margins, yes. But when it comes to February 1st, we're really looking more closely at the tariffs on Mexico and Canada. Honestly, I'm not expecting tariffs on China on February 1st, because the bottom line is, as we've seen really since and before the inauguration, Trump wants to at least speak with Xi, right? The odds of them getting to a Mar-a-Lago Accord, Trump deal 2.0, maybe not, but he wants to give it a chance.
Bear with me, and we're going to get to Canada, and we're going to get to Mexico, because those things are important, and of course Colombia, which we would be talking about. But this reminds me of The Mask of the Red Death, which is a great story by Edgar Allan Poe. People should read it if they haven't. This idea of a group of people trying to keep things out, and it comes in anyway. And it raises this question about the open source nature of DeepSeek, and the idea that maybe keeping something a secret right now when things are developing this quickly is not the most effective way to do things. How much is that changing the discussion around isolationism in politics?
I don't think it's going to change the discussion in the Republican Party and in the Trump administration in particular. I think DeepSeek and China more generally is a threat to the United States, right? China is a competitor and not a collaborator when it comes to, I mean, frankly, it was Trump 1.0 that really defined that agenda. Biden saw it through. Trump will continue to. So I don't think that this news is all of a sudden going to make Donald Trump a free trader, right? I think we will still be talking about tariffs and sanctions and restrictions, I mean, from here into the next 4 years.
Okay, so we can talk about tariffs and restrictions in Mexico and Canada. So I want to start talking about what the signal is from Colombia. This idea that initially they were shipping immigrants from the United States to Colombia, deportations, and then one of the military planes was stopped, and Donald Trump said, we're going to put 25% tariffs on you unless you open up. They open up and the tariffs are removed. Does this indicate the tariffs are a negotiating tool, or does this indicate that they are for real? Which is it?
Well, I mean, I think both is the short answer. We've talked here about our view, and it's really Andrew Bishop's view, our head of research at Signum, that there will be some tariffs that are ideological, right? When we're talking about decoupling from China in key sectors, when we're talking about punishing Europe and maybe even punishing Canada, those are ideological tariffs. They're not going to come off before they're even put on. But everything else, I think, the tariffs are meant for negotiation, right? Donald Trump sees tariffs, I mean, as a way to enact pain, as a way to raise revenue, and as a way to negotiate. Now, are all of those things, mutually exclusive? Maybe to a certain extent. But I think outside of China, outside of Europe, and maybe outside of Canada, which we can get to, I think tariffs are aimed at negotiation, right? But it's those ideological ones that I would be most concerned about, because when they're promised and when they're put on, they're not coming off.
Look, when it comes to Mexico, I think we can all understand what's going on here. There's an issue over the southern border. That applies to a lot of Latin America as well, particularly Central America. When it comes to China, reciprocity, national security, I understand all of that. With the Europeans, there's been questions about the protectionism of the European bloc for decades. But when it comes to Canada, I'm confused. I was confused last week. I asked plenty of people questions about this. I'm still confused. Can you make sense of it for us?
Well, I'm not sure I can make sense of it, but I can give you a couple of theories. The first is, right, that Justin Trudeau and his Liberal government are down, right? So if you're Donald Trump, maybe kicking them when they're down is reason enough to apply to a 25% tariff. Honestly, 25% would be pretty painful. That doesn't really pass muster for me as the exclusive reason. The second is this. There are a number of trade disputes that are outstanding, right? If we're talking about softwood, if we're talking about access to the Canadian dairy market, right? It's a similar situation, U.S.-Canada and U.S.-Europe, and that is the trade relationship. Even though the defense relationship is incredibly collaborative and positive, the trade relationship is not always positive, right? And it's not always neutral. Sometimes it is negative, and under USMCA, frankly, Canada has won more than it has lost when it comes to trade disputes with the U.S. And that leads me to the final point, which is we've done some looking at the timeline around USMCA revision and potential renewal. And honestly, our thinking at this point is that these tariffs may be an opportunity or given a desire to pull forward USMCA review by it would be earlier than it should be by about 6 months.
Don't you think Canada has a lot of leverage here? If you strip out energy, you've got the US running a trade surplus with Canada. If you include energy, which America needs to include because there's a type of crude that comes out of Canada that the refiners need, this is something that ultimately Canada has over the United States right now, isn't it? Isn't this a real position of leverage? I can't say the same thing for other nations at this point, but for Canada, don't they have some leverage?
Totally, 100%. And I think energy, in particular crude oil, is the best leverage that they have. It's one of the reasons that we expect, should we see tariffs on Canada, they will exclude, crude oil, so, and additionally, maybe some electricity. So, I mean, then we're talking about a 25% tariff, universal, except for the most important import, right? And maybe it's a 10% tariff, universal, except for the most important import. So the bottom line is, it's true that these tariffs may have, less bite than bark, but we do think that Canada is in the crosshairs. And I'll just say one thing. In relation to Mexico, right? Donald Trump has made very specific demands when it comes to what he wants to see from the Sheinbaum administration to avoid tariffs. And I think the truth is that when it comes to Canada, there just aren't those same very explicit targets, right? That they can meet to, like, Petro and Colombia yesterday, to say, okay, we've accepted your demands, now please don't tariff us. For Canada, those demands are pretty vague.
But isn't Trump just in full-on negotiating mode? Because as you said, Canada is on its back politically. He doesn't even really know who's going to be negotiating a new USMCA with. So in the end, he kind of has the upper hand at this moment.
Yeah, I think that's true. And honestly, it's a really good point as to the future of Canadian politics. And I'm not a Canadian politics expert, but we're going to get an election, right? And so I think that if we're going to add to the list of why might Trump tariff Canada, one of them is to ensure that the Liberal Party does not somehow make an extraordinary comeback and get reelected, right? So it could be Trump sort of putting his hand on the scales to ensure that he's negotiating with a more conservative, collaborator / competitor when the USMCA review does come up.
I guarantee we'll all be experts in the next few months. Rob, it's good to see you.
Good to
Rob
see
Casey there of Signum Global Advisors. If you are just joining us, a big shake-up in the equity market worldwide. On the S&P, we're negative by 2.4%. At one point this morning, the Nasdaq 100 was down by more than 5 full percentage points. NVIDIA getting hammered.
It highlights highlights two things. First of all, how much the entire American exceptionalism story has so far been leveraged off of the chip sector, in particular, one name, NVIDIA, and some of the other big tech players. And then the second thing is how concentrated this equity gain really has been in just a few names at a time where we're going to get earnings and maybe some disruption.
If it's real, it threatens the whole ecosystem. Think about what we heard last week. U.S. dominance, build out data centers, we need the energy. All of those stories just unraveling just a little bit. And I think it really captures the fact that this was all very one-sided. Everyone was on the one side of the boat. I don't know if this is real or not, but it doesn't take much to disrupt things when things are that one-sided.
When you actually look at what's behind DeepSeek, it's actually really elegant. And I think a lot of people are looking at this. That's the reason why Mark Andreessen said, this is the Sputnik moment. It's solving things in a different way, and that, I think, is what's getting people excited.
Up next on the program, the latest with Bloomberg's Tom McKenzie as DeepSeek rattles global tech stocks. Live from New York, you're watching Bloomberg TV.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I didn't do it for fun. Ready? Go.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
This is quite a start to the trading week. On the S&P 500 down by 2.5%. Check out the Nasdaq 100 down by more than 4. A Chinese AI lab, DeepSeek, demonstrating they can do more with less. Less of what? Less of NVIDIA, apparently. We're down by more than 11%. Less energy, too, apparently. Siemens Energy down by something like 20. Maybe less of everything. Over in Davos, Switzerland, guess what we were talking about last week? A lot of happy talk. Take a listen.
The dominant mood is extreme optimism.
This Davos is all Trump, all AI. If you're looking to take advantage of the United States through tariffs, which many countries do, you're in for a new rude awakening.
I wouldn't quite say a recession's around the corner, but it's not as many miles away as it was.
I got a little rattled when we were about to start because you said big event. We're coming up to a big event, and I thought it was our interview.
Shall I restart?
Yeah, let's restart.
Go back to
Okay,
T-shirt.
yeah.
All right, you ready? Live from Davos, Switzerland at the World Economic Forum, the big event. Ted Pick, the Morgan Stanley chairman and CEO.
Fantastic.
Good to see you,
guys.
sir.
I want to return to where we began, which is sports, and my sport, which is auctions. I'm looking at bond auctions, which I think is like a sport right now.
That's quite a term. Can I just say, you looked the part. When you walked in, you were so upbeat. I was said to you straight away, this is what the Gap CEO should be like.
Thank you, thank you.
What are you dressed
I
in
live
today?
the brand. Today, it's pretty much Banana Republic. Top to toe, underneath, we've got a little Gap and Old Navy.
Thank you, sir. Safe travels back to New York.
I'm an avid listener and watcher.
Well, we appreciate that. Thank
You've got
you,
to
sir.
come on again soon.
Lots of fun last week, lots of happy talk as well. Lots of happy talk from US executives, particularly from the bank executives. And the main standout, US dominance. And you compare and contrast last week with this morning, this is why you're seeing the moves we're seeing on the boards. We're questioning that US dominance.
Because it's been built on the backs of NVIDIA, on this sort of chip dominance and dominance in technological expertise. Is that being undermined by development, DeepSeek, that's been known for a long time over in China? It's just that the US market is now waking up to it. I think that Steve Chivrone was onto something when he said, actually, in these kinds of sell everything panic moments, that's when you want to start being a little bit more calm to understand exactly what's going on. Does that challenge disinflation? Does not challenge some of the efficiency that can come from other companies adapting AI more easily?
We'll take a deep breath around this table with the NASDAQ 100 down by more than 4%. If you are just joining us, welcome to the program. Under surveillance this morning, Chinese AI startup DeepSeek demonstrating it can do more with less, raising questions over the future of America's tech dominance. Its latest AI model is seen as cost-effective and runs on less advanced chips, posing a challenge to US industry leaders such as NVIDIA.
So if you take a look at what it actually does, first, it basically is less specific because it thinks it can get the same result by being less specific for some of the inputs. And then it also, rather than using all of its experts at once, it uses specific experts that it only has light up when needed. It basically reduces some of the energy intensiveness and some of the chip necessity. If this is true and can be replicated in a real way, it undermines the model of NVIDIA winning all the time, every time, and some of these big tech giants having to invest as much as they have been.
And they did it without having access to the most advanced U.S. chips, because we've seen the export controls put on by the Biden administration, obviously kept. Trump's been in office for 1 week, kept by the Trump administration. So my big question this morning is, when he wakes up, an individual that likes to check the markets and sees what's going on, what questions is he going to be asking the President of the United States, his policy advisors, on what they could do to make sure the U.S. stays dominant in this space? I feel like I have whiplash based off your conversations that you all had in Davos last week. U.S. exceptionalism, Stargate, all this money towards AI, deregulation, tax cuts, and then this morning you have DeepSeek, a lot of concern over the weekend. And how is the U.S. going to combat all of this?
It's a big week for these kind of developments. If we go through the earnings calendar again, Microsoft, Meta, and Tesla dropping on Wednesday, Thursday, Apple. Next week, you're going to hear from Alphabet and Amazon. End of the month, you'll hear from NVIDIA. Quite a time for them to come out and really try and justify where they're spending this much money at a time when we've just seen what's taken place over in China.
That's the exact right point. How much will they be penalized for some of their capital expenditures at a time where maybe it's not being viewed as necessary in the same way that a lot of people thought?
Check out the FX market last week. The euro just had its best week going back to 2023. The hopes and dreams of a lot of people in these markets is that the sitting president, Donald Trump, won't go forward with tariffs. Then the weekend happened. President Trump walking back tariff threats against Colombia. This coming after Trump announced an emergency 25% tariff on the country over a dispute about deported migrants. The White House saying Colombia had, quote, agreed to all of President Trump's terms without delay.
So the White House put out a statement yesterday and said, based on this agreement, because they are letting the migrants into the country, the fully drafted IEEPA tariffs and sanctions will be held in reserve. So they were never put on place. This was the threat. They draft them up. We didn't get any sort of signature from the president regarding sanctions or tariffs from the Treasury Department either. Unless Colombia fails to honor, the White House goes on, this agreement, then they will be put in place. The one thing that is put in place, though, is visa restrictions, which I think you can view this as a carrot and stick approach from this administration on how they're going to deal with a number of issues. But I was speaking to someone last night who said what you really need to take away from all of this is how concerned capitals around the world are just seeing this episode play out in the last 24 hours.
There isn't a lot of logic in terms of exactly where the tariffs will go or what they are for, because there are differences depending on the region in terms of why tariffs are being implemented. I just want to put this in the record. I don't get Canada. I mean, it's like our nice neighbor. Why beat up on them?
You and me both.
It seems like unnecessary. It's like the nice kind of nerdy kid who's always got your back, and you just kind of like beat up on them because it makes you look cool for the cool kids.
Well, Trump knows that he has to renegotiate USMCA by 2026. He's not just going to go at Mexico. He's going to get whatever he can out of both of them as he renegotiates this. And if you see, a lot of this also is the rhetoric. When he talks about Canada, one of the first things he talks about is fentanyl coming in from the northern border. And that was one of the biggest things he ran on, immigration and these concerns.
I think you can make the case, a much better case, that that's coming from the southern border than you can from the north. Also, the politics don't really make sense, the timing of this. There's a 20-point gap between the Liberal Party and the Conservative Party in the last polls that I looked at going into this election. Poilievre is going to take a very different approach to things like energy, perhaps in line of the energy needs of America over the next several years, assuming that Poilievre would win that election.
The only thing I can think of is that it's just posturing and that the blowback won't be that much because it's Canada and they'll understand if it's just a posturing figure. I otherwise cannot understand this and I don't really get much insight from other people.
Yeah, you're not alone. I'm in the same bucket as well. Let's turn to this, the latest from the Middle East. Israel and Lebanon agreeing to extend their ceasefire until February 18th to give Israeli troops more time to withdraw. This coming as a dispute over a hostage held by Hamas was resolved with a deal to release another round of hostages on Thursday.
So it looks like this incoming administration wants to keep this deal in place that was done under the Biden administration. And I spoke to someone who said this really does feel like they're giving the new Lebanese president a chance to form a government without any fighting, something that we haven't seen in decades. The question is, after February 18th, does this hold? Israeli media is reporting that Steve Witkoff, the individual who got the Gaza deal over the finish line, will be going to Israel. Potentially we'll see updates about this through the end of the week.
If you are just joining us, welcome to the program. Big sell-off worldwide in global equity markets. US tech stocks leading the way after Chinese AI firm DeepSeek released an update to its chatbot demonstrating similar abilities to industry leaders like ChatGPT at a fraction of the cost, raising major questions over the future of US tech dominance. Tom McKenzie of Bloomberg joins us now for more. Tom, welcome to the program, sir. For people who weren't aware of the big unveiling through last week and the buzz over the weekend, and they wake up to this morning, just explain to them exactly what is DeepSeek.
Yeah, so this is a company that dropped this model on January the 20th. Look, they've been running since 2023 as a research lab funded and spun off from a hedge fund in Hangzhou, which is the innovative hub and one of the innovative hubs in China. They dropped the model, the R1, the most recent model, on January the 20th. If you take them at face value, they spent about $6 million trading it. It took about 2 months. And that goes to the point that you guys were discussing earlier, in that this raises a question about the cost, because it has the same capabilities, again, according to many metrics, as OpenAI, Meta, and Anthropic. The cost, the pricing, the energy, and the need for compute. And that is the question mark. Those are the question marks that are being raised by DeepSeek. And it is already being built on and tested by the tech community in Silicon Valley because they license this out. It can be deployed very quickly. It is open source, so they're able to see the data and the way that they've constructed this and able to tweak it as well. So there's question marks about what goes into building these models into the future and whether it becomes commoditized. But when Andreessen Horowitz turns around and says this is a Sputnik moment for AI, I think you have to take that very seriously. And clearly the markets are doing that today.
Tom, we've been talking all the morning. Is this real? Is there more money that's going behind this? Is there something about this that we cannot see that sort of undermines the premise that everything that some of the big tech giants have been doing, they could do with a lot less money and energy? Is there anything that you could see that really gives credence to some of those questions?
So we don't know what chips they are using. We don't know what types of AI accelerators or GPUs. We have to make the assumption they're not using the most sophisticated NVIDIA chips, the Blackwell chips, because of the restrictions that are in place. JP Morgan raises a point in one of their analyst notes. They have a 50,000 cluster, the hedge fund does, that is funding this research and lab of DeepSeek. Did they use some of that cluster? That's a question mark. What chips make up that cluster? What chips make up the cluster that underpins DeepSeek? These questions we still don't have answers to. So I think it's valid to scrutinize and question what DeepSeek is telling us. But at face value, you have to assume that this could change that equation in terms of the need and the spend that companies like Meta are committing to, $65 billion through this year, $80 billion for Microsoft, not to mention, of course, the partnering and spend and investment around the energy piece of this, because this is an efficient model, if you take them at face value, and the price points, on some analysts' notes, about 5%, the pricing, about 5% of the OpenAI pricing. And that's why you could actually see very rapid deployment. It doesn't change the innovation story. It doesn't change the adoption story for AI, but it does, of course, pose a question for the builders of the models like Meta specifically and OpenAI, and the companies that feed into the supply chain, ASML here in Europe, and NVIDIA, of course. But if you're buying AI, this could be good news.
It also raises this question about the idea of trying to keep models proprietary when you're trying to develop large language models, this idea that maybe open sourced is a better, more efficient way to create the most advanced ecosystem. How much is that alone changing the conversation in tech communities and, frankly, even government communities?
And that specifically is a question for Meta as well, because, of course, they lent into that OpenAI open source proposition because they want to drive down the cost of open source, but raise the margin that they're able to get from the apps that are built on top of those models. They want to squeeze out OpenAI and squeeze out Anthropic. The fact that DeepSeek seems to have taken open source code and built on it, as well as taking hardware, presumably from NVIDIA, and use that to incorporate into the build around their models, that will raise a question mark. So will this Trump administration look to the playbook of the Biden administration when it responded to Huawei building a chip that exceeded expectations, certainly the expectations of those sitting in Washington? Will the Trump administration look to that playbook and look at additional restrictions? Restrictions, of course, already in place for hardware and software. How far do they go in terms of trying to carve out space where China is unable to get both the software and hardware that has driven this development?
I'm sure a lot of those policy proposals are being drawn up, Tom. When it comes to this idea, though, of China versus the U.S., when it comes to a tech Cold War, how much does this challenge the notion that China is years behind the United States?
Well, on the reading of Andreessen Horowitz and others who have looked at this model, who have stress tested it, I've downloaded it on my phone, I have a play around with it. You can see the reasoning go through each step, step by step. You can pose questions about Tiananmen Square and Xi Jinping, you get nothing. Not a big surprise there. But what it reminds us is that China is able to innovate and iterate on the back of Western technology. Whether they've done that with TikTok, we've had a reminder of that over recent months, haven't we? And the fact that that became a leading social media app, or electric vehicles here in Europe, and the challenge that poses to our industry, European industry. Now, when it comes to AI and the models, it's a reminder, China has the skills, they have the engineers, particularly the systems engineers, they have the data, they have far more data than anyone else, and they're able to build and iterate and innovate on Western technology. And that is a catch-up that many had not predicted in the AI space, that they'd come to this point so quickly.
Certainly on display over the last week. Great work as always, Tom. Thank you, sir. Tom McKenzie there of Bloomberg. Out of the city of London, NVIDIA is down by more than 11% in the pre-market.
It also points to the fact that valuations got very elevated and that a lot of people placed their bets on this story and imagined multiples that were incredibly high. That might be the biggest takeaway of all from this event.
It's a wake-up call at a time where things were very one-sided going into the last week. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. U.S. Steel is doubling down on its confidence in the Nippon Steel deal, saying that the interests of activist investor Ancora Holdings are not aligned with the company. Ancora Holdings is pushing the company to abandon the Nippon Steel deal and nominated 9 candidates for the board. People familiar with the matter tell Bloomberg that Ancora will push U.S. Steel to end litigation to rescue it and instead collect a $565 million breakup fee. Bloomberg has also learned that Elon Musk has initiated conversations about using blockchain tech at the new Department of Government Efficiency. According to sources, the Tesla CEO has mused about the idea of a digital ledger as a way to track federal spending, secure data, make payments, and even manage buildings. COVID-19 likely originated from a lab leak rather than a natural source, according to the CIA. The agency now aligns with the FBI and Department of Energy, which all said the virus probably leaked from a lab in Wuhan in central China. The announcement came after President Trump's new CIA director, John Ratcliffe, declassified existing information. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes. Up next, a resilient labour market.
The U.S. labor market has been the most resilient labor market in the world. No question, hands down, most resilient. Growth is going to create demand, and demand is going to create demand for talent, and then we're going to be back to a tight labor market.
Lots of data through the week, and a Federal Reserve decision too, which we've hardly talked about. That conversation up next.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Major moves worldwide. Let's check out the cross-asset board first. So equities decline. We're down across the board. Equity futures on the S&P off by 2.3%. Much bigger moves lower on the Nasdaq 100. That pushes a bit into the bond market. Yields down by 11 basis points on a 10-year in America. We're back down to about 451. As for the single names, Nvidia lower by 11.6%. Meta, some of the big spenders out there, down by close to 4%. And then Lisa, the utility providers, keep going back to this. Utilities last year on the S&P up by 20%. Just one energy name out of Europe today over in Germany listed on the DAX. Siemens Energy, down by 20%.
Two things. Number one, this highlights just how far some of this narrative has gone about AI and all of the ways that it would be deployed, which I think is really interesting and I think is going to have lasting legs regardless of what happens in terms of exactly how much this can be replicated, the Chinese model that we've been talking about. And then two, it really focuses on maybe people getting a little over their skis with the idea that the Fed would be hiking rates indefinitely and inflation would never come down. And that's also shifted this morning.
A Federal Reserve decision just around the corner alongside some economic data through the week as well. Under surveillance elsewhere this morning, a resilient labour market.
The U.S. labor market has been the most resilient labor market in the world. No question, hands down, most resilient. We've held unemployment fairly steady, workforce participation fairly steady, and we haven't overheated at numbers that traditional economists would say would be overheating. Growth is going to create demand. And demand is going to create demand for talent, and then we're going to be back to a tight labor market. So I would say the tone is more optimistic.
So here's the latest. A strong U.S. labour market and sticky inflation raising bets the Federal Reserve will keep rates on hold this Wednesday. Fed Chair Jay Powell also set to give his first news conference since Trump's inauguration. Nita Richardson of ADP joins us around the table. Nita, it's good to see you back from Davos.
It's great to see you
Welcome to the studio. Huge moves worldwide in financial markets, and I think a lot of people are assuming that Wednesday could be a non-event for Chairman Powell. Do you share that view?
No, I don't. I think what the Fed is signaling on Wednesday is super important for the rest of the year. Borrowing costs, remember, for consumers are still quite high. They're still at record highs. So even though we've seen these Fed rate cuts take root and really influence Wall Street moves, it hasn't translated yet to Main Street. And that's what Main Street is waiting for. That'll keep the labor market lifted and relevant in 2025 as a key component of U.S. growth.
So what do we expect to hear from them, other than we don't get involved in politics and we're on hold for now?
Well, you're going to hear that.
Okay, but I'm just wondering, what are we actually going to learn from them?
I think there is going to be a nuance to those comments because they are going to try and signal future paths. They're going to try to tip their hand because they want to engage with Wall Street, with the stakeholders and the American public of what's next for the Federal Reserve. So there's going to be some confidence on the future direction of the economy. Remember, economic growth is a huge part of their, overall context and objective. And then there's going to be some thoughts on the future direction of the labor market and inflation. Those are their two key mandates. So you'll get more than we're pausing for now. Come back after the commercial break. I think you'll get more than that, but you're not going to probably get a definitive rate path for 2025.
When I was caught up in the hysteria of DeepSeek this morning and this idea of the market move, it raised this question in my mind of the relevance of the Fed, of even government policies that seem so far removed from some of these sea changes that are happening in technology that could very much disrupt the labor market. Do you see a quicker adoption of AI completely changing the labor dynamic in a way that the Fed cannot extrapolate out based on current information?
Well, AI is just one of two mega trends I'm watching. I do think it has the potential to change how we work. Not necessarily the jobs themselves, but how the jobs are executed, with a lot of our tasks being automated. What does that leave room for in your day? But also there's this other megatrend no one's talking about, which is age. And the fact that the U.S. workforce is rapidly aging, with 10,000 Americans, 10,000 U.S. workers turning 65 every single day. That's 4 million hitting retirement age every year. And that means that employment growth is going to slow down significantly over the last decade, like a fraction of what it was the previous decade. So you take generative AI and AI advances and you match it with a rapidly aging workforce where skills and domain knowledge are walking out the door every single day. And what do you have left? Well, that's certainly structural change that the Fed will eventually have to confront, but right now they're in the here and now trying to get to that 2% target.
It's not just the United States that's facing these demographic changes, though. There's a ton of countries that are dealing with much older generation, and actually they don't have population growth that they normally would see. So is AI and technology actually matching the moment then for what the labor force requires?
Well, you think about how an economy would change with more older workers. It would reorient to healthcare. And where we haven't seen these huge advances in is something simple like the care economy, what it takes to be a caregiver. I mean, that's a human occupation. But you've seen today, in the December jobs report, a huge increase in hiring in healthcare. So yeah, there is some disconnect between where the labor market is now and where the tech advances are coming, and I think over the next few years you'll see them merge.
I'd love to get back to the Fed this week because this administration basically was brought into power for one major reason. That part of that was inflation. And at the same time, we see this idea of tariffs being whipsawed, something that the Fed maybe we'll be on wait and see to see what the policy is going to be, but inflation expectations are still high. So at some point, are they going to have to do more to combat those expectations everyday consumers have?
I think you make a really important point that is often missed. We're so focused on hitting that 2% target, and we're not as focused as anchoring to 2%. Those are that's a degree stronger than just hitting a 2% target. Now, what gives me comfort is the Fed has 400 PhD economists whose job it is to run these scenarios. And they do it with, they've been doing it for decades. So I think this is not outside of the Fed's capacity to run scenario analysis about policy changes. But yeah, they're going to have to be watchful of where the consumer is and where policy is going, for sure.
Always love hearing from you. Appreciate it. Thank you. Nina Richardson there of ADP. Going into this week's Federal Reserve decision and the economic data as well, I have no doubt that if this move continues, Chairman Powell will be asked about it on Wednesday. Perceptions of wealth in America can hinge on many things. I'll give you two. House prices of one. The S&P 500, or the Dow, is another.
Does it give him more room to actually express confidence that the Fed can cut again this year, which will actually remove some of the political pressure from him? That's my question. How much that edifies and leans into some of the rally that you've seen at the front end of the yield curve at a time where the likes of Mark Seidner over at PIMCO are saying, look, the Fed's going to cut anyway because inflation's coming down.
Last week, the President of the United States says he's got things to say on the Federal Reserve, and if he disagrees, he will come out and say so. So we're going to hear that on Wednesday after the press conference.
Yeah, I'm sure he will come out and say they should have cut by 50 basis points. This real estate market needs to get revived. And by the way, rates should be lower and inflation needs to come down. Oil prices.
He says he knows better. He says he knows better, he thinks, than him, but didn't actually say him, but it was Chair Powell.
If he can engineer the kind of energy prices he'd like to engineer, it could lead to lower interest rates. That kind of makes sense.
Sort of. That wasn't really where the inflation came from, though. I mean, over the past couple of years, it wasn't an oil shock. I mean, there's lots of questions.
Sure,
but,
not just that.
But yeah, sure, yeah. But, if you engineer things.
Energy shock was certainly part of the story over in Europe.
Yes,
that's for sure.
Absolutely.
In the next hour on Bloomberg Surveillance, we'll catch up with Seema Shah of Principal Asset Management. We'll speak to Henrietta Trays of Veda Partners, Mandeep Singh of Bloomberg Intelligence, Jim Bianco of Bianco Research. The second hour of Bloomberg Surveillance, next.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Having Donald Trump come into office is a very welcome change, and let market forces drive.
I'm optimistic on a lot of policies that are coming together.
When you have a messaging from the top in the United States around pro-business, that causes investment.
The pro-growth agenda is going to be something that's front and center.
I think we're going to ultimately have to see what the year brings, because there's still more unknowns than knowns in the equation at this point.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Check out these moves to start Monday morning. Equity futures down across the board. We're down 2.35% on the S&P 500. Take a little look at the NASDAQ 100. If you're just tuning in, joining us, welcome to the program. About 90 minutes ago, that was down by 5%. We're now down by something like 4%. There's lots of whys. Here's a single name, NVIDIA, getting absolutely hammered in the pre-market and down by close to 12%. The buzz over DeepSeek over the weekend, Lisa, absolutely overwhelming.
This is a Chinese startup that really began in 2023, was using chips that ostensibly had less computing power than the most advanced one by NVIDIA, and came up with a model that rivals OpenAI while using a much less expensive infrastructure, a lot less energy, and frankly, just as much accuracy. This is shaking up the model that so many people were looking at, that NVIDIA would benefit as everybody poured cash and energy into the build-out of chips.
We've already talked about this a few times this morning, of course. Blanket coverage into the opening bell from now. But to see Microsoft lower, Meta lower by 4 to 6%. These are the companies that are going to spend $50, $60 billion on CapEx this year. These are the companies that spent a lot of money over the previous 12 months. And here you are, a Chinese firm coming out and saying, we can do more or as much with a lot less.
And you made the great point earlier this morning where you were saying essentially how much does this raise the bar for some of these companies to show why they are spending as much as they are, with the likes of $65 billion from Meta expected to be announced this Wednesday. As we get these earnings announcements, will they be punished even more for their capital expenditures at a time where potentially it'll be proven not to be necessary?
These earnings calls, box office now, over the last week, in a big way. Everyone's tuning into that. This Wednesday, you'll hear from Microsoft, Meta, Tesla. Over the next week, you'll hear from Apple on Thursday. Then to next week, Google, Amazon, NVIDIA at the end of the month. These are going to be big earnings reports for these companies.
And what are they going to say? We're throwing more money at it? Does that matter? We have access to the better advanced chips. Does that matter? What you see from DeepSeek is that they were able to make something pretty incredible without this access to advanced U.S. semiconductors. The founder said in an interview last year, funding's not the problem, the access to this money is. I think it's interesting what this associate professor has to say at the University of Technology, Sydney. This younger generation also embodies a sense of patriotism, particularly as they navigate U.S. restrictions and choke points in critical hardware and software technologies. You have to think they did this with the walls being up. What can they do if they even had more access?
There's a large takeaway here, regardless of exactly how this shakes out. Right now, we're talking about sea change. The world is over. The world has changed. We're going to have a different narrative from here on out.
Your favorite subject, isn't it?
100%. You know, basically Armageddon. Let's ring the bell. But before you go there, I think that there is another takeaway, which is basically how much this market got lopsided in one narrative.
Yeah.
And this, to me, really is a gut check on how much that can really be quickly shifted at a time when we knew about DeepSeek, or people in China knew about DeepSeek months ago. So there is a larger takeaway here that I think is instructive for the market.
I agree with you, and just to build on that, just to reiterate it, I think that's really important. When you see moves like this, you have to talk about where you have been over the past few years. It's not just about the magnitude of the breakthrough in China, it's also about the magnitude of the move here stateside and how one-sided expectations had become. Our ability, our capacity to absorb negative news, this is something that Lori Carvacina raised over at RBC coming into the new year, greatly reduced by the fact that these valuations were so elevated into 25.
And it was led by the tech stocks. We saw that even last week with another record high for the S&P 500. Why? Because of the tech stocks led by NVIDIA could do no wrong. when you have technology that's moving so quickly, there were even people who study neural nets and some of the LLMs, large language models, talk about how we don't fully understand what the implications will be. To put all your chips in one basket, so to speak, and talk about elevated valuations into the future becomes a much dicier proposition, and I think that's the gut check.
Lisa, do we need to rethink the whole thesis now? The CapEx narrative, the story of last week. We're in Davos, Switzerland. Everyone's talking about data centers, energy needs, utilities last year rallied by close to 20%. I keep talking about this one name over in Europe, Siemens Energy, down by 21%. Over on the DAX?
Well, I don't know, but I do think that there is this large question, and there had been a large question about whether AI could be deployed with the infrastructure that we had, and the answer was no in its current form. The only way to get it to have the efficiency that people needed was to completely change this construct where they used a lot less energy. So ostensibly, you still need some of those energy sources, you still need some of those data centers, but you just get a much faster adoption, which actually is beneficial for a larger range of companies.
A lot of comments already this morning, prefaced with, if it's real, if it's real. Mizuho asking those questions themselves. Is it a synthetic scare? Were costs subsidized by the state? How much power was actually used, and did it come from elsewhere? All these different things we need to work out.
I think there'll be a ton of questions in this gray area because it's coming out of China, and because they didn't have access to these advanced chips, how exactly did they do this? Also, I think it is very interesting, where did the funding come from? Is this something that the CCP is backing? And if so, what else are they backing that maybe we actually don't have all the details behind?
Coming up this hour, plenty of commentary on all of this. Seema Shah of Principal Asset Management as stocks retreat from all-time highs. Henry Trays of Vader Partners as President Donald Trump reiterates a key tax pledge. And Mandeep Singh of Bloomberg Intelligence as China's AI startup DeepSeek slams tech stocks. We begin this hour with global stocks very much under pressure. Investors rattled as China's AI startup DeepSeek threatens US tech dominance, leading to questions over Mag 7 valuations. Seema Shah of Principal Asset Management has been saying the following. While the secular trend upward of the Mag 7 should persist over the long run, their expensive valuations coupled with elevated bond yields imply that investors should pay increased attention to stocks trading at more attractive valuations. Seema joins us now for more. Seema, welcome to the program. Of course, you wrote that before the news over the last week. How much does the news over the last week change your thesis for 2025?
Hi, John. Well, look, as you said before, there are a lot of question marks. Investors, I think everyone needs some time to digest exactly how real this is, what are the impacts, how it can be sustained. But, you know, as we said, valuations are really extended. So coming into this year, there were already going to be vulnerabilities. Now, I don't think anyone quite saw this coming, but it really does accentuate that need for diversification and looking at things with lesser valuations. But, you know, we came into 2025, and I think across the board, outlooks, the theme was US exceptionalism. We're at the end of January, or not even at the end of January, and a lot of this has the potential of already being rewritten for 2025. So I think a lot of uncertainty, adding to all the tariff uncertainty, inflation uncertainty that investors were already dealing with, it certainly looks like a fairly tough year for investors.
Seema, just to follow up, this is a question that Lisa raised on the program a little bit earlier. Given what we know, and we know a fair bit over the last week, not enough, but a fair bit, do you think it is sufficient to undermine US exceptionalism, US tech dominance?
Well, I think what it does is it does really put bigger question marks around those valuations, because it reminds investors that these companies are not completely immune. It's not like they're never going to have competitors. There will be competition. So there has to be question marks around how much is being spent on chips. Companies like NVIDIA, what is going on with their future? You know, can this really be sustained? And is demand going to be kept? So I think there has to be question marks. I think there's a longer term story where US exceptionalism can persist, probably not to such a significant degree, just because of innovation, the system. You know, you have an administration coming in now who is very much focused on that growth, ensuring that the US keeps its stage. So I think you can't answer that today, but I think investors have to wake up today and say, well, look, maybe we just don't look at the US, and global diversification has to be even more prominent in portfolios than they were just a week ago.
I love how when the market is flying high, we have 1 million investors who come on and they say any dip will be a buying opportunity. And then there is a true bona fide dip, and people say, well, this makes us rethink everything. Seema, is this one of those moments where it's a buyable dip, or does it make you rethink everything?
But it's a good question, because I think, you know, we've been, like everyone else, we've been looking at money market funds and wondering why are people not deploying? And the answer that keeps coming back is that they've been looking at valuations and they're just not sure They want to get into the big tech, but they just don't like this price. Now today, or even in a few days' time, when tech maybe comes down even further, investors are going to get back in at that point. I think there's going to be question marks. I think they're not going to jump back into the market until they have real answers. And if anything, this week, what investors should be doing is looking at what are the other sectors, what are the things that can benefit from the overall gain in productivity that DeepSeek probably offers outside of those Mag 7. So I think a lot of question marks. I wouldn't say that this is a buying opportunity for all these big tech companies today.
Seema, that is exactly where I wanted to go. How much does this actually point people toward the direction of where AI can actually be deployed? Are there particular areas that you're looking at that are the quickest and cleanest beneficiaries of this type of efficiency?
Yeah, I think like everyone else, we've been doing all the homework into the various sectors. The two that really have stood out to us are healthcare and agriculture, the clear benefits that they can gain. So I think that story is still very much in motion. If anything, it's probably been amplified by today's news or the last week's news. So I don't think there's question marks around those. It's really about those specific companies that have really benefited from this drive up, thinking about all the infrastructure that will be necessary to drive the kind of AI that we've been seeing. So I think that's where the question marks are, but I think it does mean some pretty good news for other sectors around the world.
Is this a moment that you would actually want to have more exposure to the Chinese equity market?
It's such a good question. I think everyone's going to be wondering that today. Did we make a mistake by not increasing exposure? I think there's too many question marks still. There's still a lot of concerns around the fundamental story. Are company or investors willing to go all in into one trade, just like they did with the US with the Mag 7, into a new company or one or two companies in China, so that one-sided bet just shifting? Or are you going to look at the whole ecosystem within China and say, look, there are still some deep-rooted fundamental problems that investors have to consider? So it's global diversification. I don't think it specifically means China. It's looking at what are the other companies, what are the other countries that may be a little bit less vulnerable potentially to what's emerging today.
Seema, you mentioned earlier the U.S. is going to make sure they maintain their tech dominance. We have seen just in the first week, so I don't know if it's a real barometer, but just in the first week, President Donald Trump has really taken aim on Canada, on Mexico, on Colombia, and he's held off on China. Do you think something like this will push the administration to ratchet up the pressure on Beijing?
I have to imagine that the administration is going to try and do their homework and try and figure out how much of a threat this really is before they jump headfirst into making some additional threats. But look, the news over the past week, just because they hadn't moved forward with China or Europe for that matter, doesn't mean that tariffs were never going to come. I think we were just thinking about what is the timing and how drastic could they be. If this really does prove to be something very meaningful, then yes, I'd expect that maybe tariffs on China could be greater. The US has even more of a reason to try and rein in their strength. I certainly don't think that it's something that they're going to jump into so that tomorrow you start to see headlines.
Just to wrap this all together, Seema, do you think that the Fed has ever been less relevant on a week where we're going to be hearing from Meta, Microsoft, and Tesla on the same day as the Fed rate decision?
I think that coming into this week, the Fed was already somewhat irrelevant because I think everyone knows that they're not going to cut rates this week. Having said that, yeah, I mean, look, this isn't going to be the headline news. No, I mean, even on the Bloomberg terminal, I struggled to see anything on the Fed for this morning. But look, this could be key because I think just want to say one thing on this. We have been very much, I think, reassured that US consumers' household balance sheets are very, very resilient because net worth has increased so significantly. But we can't ignore the fact that net worth in the US has been driven higher significantly because of equity market exposure. So any kind of concerns of equity markets does unfortunately feed through to the US economy. So I think that is something that we're not going to hear about from the Fed this week, but it's something that they have to be watching, tracking very, very carefully over the coming months.
Seema, appreciate your input as always. Seema Shah there of Principal Asset Management. Off the back of the sell-off this morning, so far this morning, equity futures down across the board. Nvidia getting hammered. Cantor Fitzgerald putting this out this morning. Cantor would buy Nvidia on weakness, saying the following, that despite concerns about what this could mean for demand, quote, the announcement is actually very bullish, with AGI seemingly closer to reality and Jevons paradox almost certainly leading to the AI industry wanting more compute and not less. I believe it's Jevons and not Jevons. Jevons paradox? Is it? Danny Berger writes in to explain what all that is. Efficiency increases demand, not decreases it. You saw that in the Industrial Revolution. You saw that when Japan made more energy-efficient cars.
Well, if you can basically expedite the adoption, you could increase demand across a wider swath of potential firms. So maybe it won't be the Metas and the Microsofts buying all the chips. It'll be, United Health or some of these other companies that are deploying it in other ways. Again, a lot of unknown. We don't know necessarily how much actual investment went into this, what chips they actually were using. We don't know how applicable this will be. Nonetheless, it counteracts some of the the dominant narrative that we've had over the past couple of months that really has driven a lot of the concentration of returns in NVIDIA.
Let's get you an update on stories elsewhere this morning. Are there any stories elsewhere? Thank you, Danny Berger. Appreciate the explanation.
Well, funny you should say that. A big day for Jevons Paradox. And I kind of want to start there, just giving you a roundup again of the deep sell-off we're seeing. DeepSeek driving a global tech sell-off. You can see just how off we are in those various names. NVIDIA down 11.3%. It's a new model demonstrating performance similar to the world's top chatbot without the high price tag. It's built with open source tech and challenges the notion that China's AI tech is behind the US. There are stories elsewhere. One of them, AT&T beating fourth quarter earnings expectations, only up about 1%, but that was thanks to an increased mobile customer and fiber-based internet subscribers. Seasonal promotions and bundled product offerings drove the results. Revenue jumped 1% year over year. The communications giant reported 482,000 new monthly mobile subscribers and 307,000 new fiber optic internet customers. Elsewhere, Israel and Lebanon agreed to extend their ceasefire until February 18th to give Israeli troops more time to withdraw. This ceasefire deal between Israel and Hamas still holds after a dispute over hostages was resolved. Talks on the return of Lebanese prisoners and the release of more hostages are set to begin. And that's your brief. John.
Hey, Danny, thank you. Thanks for this morning. More from Danny in about 30 minutes' time. Up next, Henrietta Trey's of Vader Partners breaking down these big moves and what it could mean for the US-China relationship. That conversation just around the corner. From New York City, this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Equity futures down across the board. On the S&P, negative by 2.3%. On the Nasdaq 100, off-session lows. Look at that number. Believe it or not, off-session lows. We were down by something like 5% a few hours ago.